Well, right down to the second. Good afternoon, everyone. As you know, I'm Swiss Canadian, so we have to start on time. It doesn't work a different way from me. Welcome, everyone here in the room. My name is Michael Steinman. I'm the President and CEO of Pan American for quite a while, actually, already. I think this is my 11th year as CEO and my 23rd year with the company, together with a few other white-haired guys here in the room, Steve and Martin and Ignacio. We started all at the same time in 2003 or 2004. So we can tell you the story, and it's an incredibly exciting story about Pan Am. And by the way, welcome also to everyone on the call. I hope there's a lot of listeners there. It's all recorded, so you can go back and listen because there will be a lot of information. So very exciting story what happened in the last 2 years. We did this just about 2 years ago, I think, when we closed the Humana transaction, and Pan Am went through a lot of changes there. Of course, that has all settled now, and we closed in September also the acquisition of the 44% of the Juanicipio mine when we purchased MAG Silver, and Sam will give us more details on that. But of course, big changes to Pan American, a very different, much stronger company. And you will see this afternoon that there's a lot to come still, a lot of catalysts that are up there. And I just, want to mention a few, but we just put out actually Timmins, an update on Timmins today. And there's a lot of interesting discoveries at Timmins. And, we'll take a few more months to work through that, but very interesting. We'll see a lot of details on that. Of course, La Colorada Skarn, our flagship, homegrown, all found internally, one of the biggest discoveries in the world over the last few years, and probably will be for a long time, which is going to build our next nearly 20 million ounce silver producer a year. Of course, there is still Escobal. There's others. So, we'll take some time to explain you all of them. And please, if you have questions, just jump in, ask the question. There will be maybe three times the question and answer period in between. And then, of course, at the end. And when we are done here, unfortunately not for the people on the phone, there will be some cheese out there and some time to mingle and to ask more questions. You have a big team here, technical team from the company, as I said, with a long history. And finance, obviously. So we should be able to answer all the questions you have. So let's get started. And of course, not only me, but we all will use forward-looking statements. So please make sure to read the cautionary notes on our public filings. Just a quick agenda. I'm not going to step through that. You will see how it goes forward. It's just a logic step. I will give the introduction, and then we have the different teams that will explain you all the catalysts, what we did over the last few years, and where we see this is going, and how the company is gonna grow. So I'm not. Oh, you don't see that yet, right? Okay, yeah. Okay, so that's the company now. You see there the map. Of course, we're still active in Latin America. And I got a lot of questions about the geography and why we are where we are. And it's really geology that dictates where we are. If you want to be a large silver producer in the world, that's where you have to work. A large part of the silver deposits are really found in the Cordillera. So some are from southern Chile or Argentina all the way up to Alaska. So you see there like pearls on a string. That's where our assets are. That's where our projects are. You see two outliers in that sense, Jacobina in Brazil and the Timmins assets in Canada. Way further to the east, and guess what? There's no silver there. Those are pure gold producers. So silver, it's good. You can find gold in many other places, but silver is a bit harder to find. And when you find silver, silver comes with base metals and with gold. So you find it with lead, zinc, copper, and gold. Hence, we produce all those metals as well. So that's just a bit different than gold, where you look at Jacobina, that really just produces gold. I think, Steve, it only produces a few thousand ounces of silver a year. So really pure gold producers. You can't find that on the silver side. But it's really the geology that dictates where we are located with our, you see there are 10 producing mines. Actually, it's only 9 mines that we are running. The 10th mine is the Juanicipio mine. In Mexico, it's a joint venture with Fresnillo, and Fresnillo is the operator. So it's really 9 mines that we are running. As I said, we are advancing several projects, La Colorada, the Skarn, obviously work hard to bring Escobal back into production, and now look at the potential expansion and optimization of Jacobina, and now what we published this morning, doing a lot of work on the Timmins camp as well. And of course, if you want to be a successful mining company, you need large reserves and resources. That's really the base of your business. And we have the largest silver reserves and the largest silver resources in the world. Not on the gold, but a respectful gold reserve as well. And you see there, what's really important for us, a very nice diversification in Latin America. Of course, we're running our assets in jurisdictions that are more risky than just doing it in Canada. That's just what it is. If you want to have exposure to LATAM, which is one of the biggest metal producer on the planet, Pan American is an excellent way to play that exposure. But I really like to be diversified in different countries, so we're not too exposed to any given election cycle or any other issue in one of the countries, and that's what we have achieved there with very nice diversification within Latin America. But really, we work in the places we know. Most of us, including myself, spend all their careers and a lot of their private life. Me too. I lived and worked for over 16 years in LATAM. Obviously, now we still work there. You know, we speak the language, we know the places. I think it's absolutely crucial to be successful to do it so. So I already said that, the leading exposure to silver. I think during today we can show you how that works out. We have built many mines. Again, there's not many groups that can say that of themselves, but we have, and we will continue to do so. The big growth that we have ahead, incredible cash flow generation. And you know, that was a strong cash flow generation when silver was at $35 a couple of years ago. So, of course, no surprise that those really strong cash flows now persist. And you saw probably Q1, again, another really, really strong quarter that we delivered there. The reserves I talked about, you have to replace reserves. I have a slide there. And obviously optionality that is not fully valued yet in our share price. And just quickly, you see on the silver on the left side and gold on the right side there, how obviously silver we started working on first, how you know, over many years we increased that silver production. You see there, how do you call that, the COVID dip, I guess. And then the growth again. This year we guided 25 to 27 million ounces of silver production. And just the blue dots show you all the operations we built during the time. With the team that you see here, and obviously more people, it's not just 3-4 people that built those mines, but this is all internal work that we did on the silver and on the gold side. So very proven mine builder, and I think it's important when you want to be a proven operator that you not only know how to operate them, but you also know how to build your mines. So absolutely crucial for that. So what we're going to talk about today is, of course, La Colorada. We put out an updated PEA now a few weeks ago. Very exciting project. It was exciting before, maybe a bit confusing for 2 years when we came out with the first PEA, because we basically were on a plan to build the biggest zinc mine in the world with a lot of silver production. But the exploration team, and Chris will show a lot, has been incredibly successful in adding high-grade silver discoveries, not only in the skarn but also in veins, that we actually had enough high-grade material available to come out with, I would call it the first phase or phase 1 high-grade silver production. That gave us the opportunity to come out with a PEA with a smaller project, still big, but producing over 19 million ounces of silver a year in the peak years. Very exciting project that we're going to build here over the next 5 years, and we see a lot of details about that. Obviously, the Timmins camp, we're going to talk. We have 2 of our people here from Timmins that run Timmins for us, and they have been very successful up there. Jacobina, and I think we should make very clear, we always called it the optimization study, and I got questions of when is the study coming out, and if you have a chance afterwards to talk to Steve, it's actually, I think, 32 different studies, so it's not just one study. Some are coming out, some we're building this year, So it's an ongoing process to see how far we can go at Jacobina in one of our best gold assets. That actually right now, I think we have a mine plan until 2053, and it's just an asset that just keeps growing. And of course, the latest addition, which is the 44% of Juanicipio, they're brand new silver mine in Mexico, in the biggest silver district on the planet. That district has produced, I think, about 4.5 billion ounces of silver historically, and I think it's in production for about 450 years. So that's real elephant country when you look at silver. We made a big change to our shareholder return. I'm sure you've seen that. We just announced after Q1 that we plan to return $1 billion to our shareholders this year. We're already close to the end of Q2, so this is coming quick. It's a mix between dividends, which we fixed now as a $305 million. Why 305? Well, we paid 18 cents. We increased the dividend every quarter, and the last increase brought us to 18 cents per share per quarter, which was the equivalent of $305 million. I just wanted to fix that number now because we're buying back shares very quickly. There will be less shares outstanding, so automatically, as we fix the dividend, U.S. shareholders will receive every quarter a little bit more dividend on the shares that you hold. So that number will be fixed, and then the rest, let's call it $700 million, will be share buybacks. And you see there how we intended it. Not a big surprise that we just put it equal for each quarter. It's not going to exactly happen like that. Of course, we react on down days, etc. Be opportunistic on there. But that goes full steam ahead. I have all intentions in the world to return that $1 billion. I think we are already close. We finished Q1 with over $1.8 billion cash, and that's still growing fast. And it was, a good time to return way more to our shareholders while we still have far enough cash available to go through all the builds and expansions that we plan to do so. So incredible story on the return to our shareholders. Going to be very, very nice return, and I really hope that we can do this for many years to come. Obviously, depending on metal prices, but I think we are now at the size of a company and an environment of metal price where it generates so much free cash flow. That absolutely is the time to return more money to our shareholders. Just quickly talked about reserve replacement, and Chris will show more after that, but that's over the last 20 years, 65% of all the silver we mined were replaced in P&P, not in resources. There's way more resources, but just in proven and probable reserves. And you see there the cost to replace them. That's all the drilling, all the development, everything to get there and bring it to P&P, 80 cents an ounce. We can't buy ounces for that money. Obviously, nowhere in the world, nobody at any silver price would have ever sold silver at 80 cents. So that's a big value creation over time. And that does not include what you see on the right side, which is, probably close to 400 million ounces between the skarn and the high-grade discoveries in veins that Chris and his team achieved. And that's only silver ounces. It doesn't include all the gold that you replaced, doesn't include all the base metals that you added. So very strong reserve replacement. I'm sure there will be more questions about Escobal, but just quickly here, you see there a picture of Escobal. It's always impressive when you see how small the footprint is of one of the best silver mines in the world. Unfortunately, still not in operation. I know it has been frustratingly slow for all of us here, including myself, but there's steady progress on it. It just takes a long time. Just for people that are not aware, this was an asset that belonged to a company called Tower Resources, who really lost social license and was forced to go basically back into a consultation with an indigenous group. And that's really what we're working on over the last 3-4 years. And when I say we, it's actually not us, but it's the government of Guatemala that has to do the consultation, and we're just party to it. So, of course, I'm working hard on it as well, because there's just so much value that we can provide to Guatemala and the communities around with that asset, which is state of the art, ready to go. Very little working capital to get the mine started, but I don't know when, and I know I get a question all the time. So while we know La Colorada can produce nearly 20 million ounces in the peak years, we know when it's coming, how much it's going to cost. All I know here is that it's not going to cost a lot of money. We think about $80 to $100 million working capital to actually get it going because all the infrastructure is built, but I don't know when it's happening. But when it happens, we saw that it produced about 20 to 21 million low-cost ounces that, I think are largely not valued in our share price yet. So I keep working on it for sure. I see that the reserve resource statement, what is about nearly 400 million ounces of high-grade silver in that asset to wait. Just quickly on the silver market. I mean, we can talk about the silver market for probably the whole afternoon. Silver market is very interesting. There's obviously two pieces to it. There's the industrial demand, which is growing very, very quickly, and is one reason why we see these floors stepping up, from the $4 to the $8 to the $14, $20, $25, $36, $40. Now I think that floor sits probably somewhere in the $60 to $70. And then you get these peaks on top of it, which is really investment demand that jumps in. That comes in and out a bit. But when you look at the industrial demand, it's now 60 or 65% of the silver that is used up. And when you look at the uses of silver, which is mostly electronics, clean energy production, water treatment, electrification, AI, fast internet, fast networks, cars, I can make you a long list because it's really used in electronics. It's very easy to see that the silver use is going to increase over time. And it doesn't really matter for most of these applications where the silver price is going to go, because when you look at your phone, your computer, it's a few grams of silver in there. It's just many, many phones in the world, but it's not dictating the purchase price of your electronic device because silver price goes up. It gives you and allows you to get the fastest connection because silver is the fastest electric conductor in the world. So a lot of demand on the silver side for the industrial side. We are in a shortfall now for like 6 years. But then you see on the right side also ETFs, of course, as I said, when the investors come in, and sometimes the silver market is very small. So when a lot of investors come in at the same time, the silver price, as we've seen in January, goes up to $122 while you have dinner. Very strange situation, and we know when that happens, it's not sustainable. And it comes back, and silver dropped $30, I think, 2 days later. But it is, has very nicely consolidated right now, somewhere in the $75 to $85, which obviously phenomenal price for us, a company that made a lot of cash flow and strong earnings already at $35. So really, really strong market for us. So as I said, mostly electronics, cars, you name it, a lot of uses of silver, and you just get more and more uses by the day. A very, very modern metal. It's a critical metal now in the U.S. and in other jurisdictions. I think it will be declared critical metal in most countries in the future, just because it's so versatile. And just to show you a little bit, this is the use of silver in photovoltaics. Of course, there's a lot of thrifting. I think photovoltaics is probably the one aspect of silver where the silver price really has an impact, just because it uses up so much silver. So less and less silver is used in each panel, but more and more panels are installed with the effect that it's now very stable, or quite stable there around probably 200, let's call it 200 to 250 million ounces of silver needed for clean energy production in photovoltaics. So an important part of the silver use. But we can go through others. There are cars. You see EVs obviously growing quickly, hybrids, but also combustion engine. Electric cars need more silver because you have more computer power in there to control your battery charges, etc. But the more computer power you have in a car, the more screens, the more radios, the more fancy cameras, the more silver is needed. And as we know, every car now has that. And it's not just the luxury cars like it was before, but now you see it in any car, and that really drives that demand. And then, of course, electronics on the right side. I think none of us will plan here to have less electronics in their lives in the coming years. Well, what does make the story so interesting is when you actually look at the mine supply, it's not increasing. Because, and remember I said, and you have it there, 71% of the silver production is a byproduct. And we see there from what it comes from: gold production, copper production, lead zinc production. it's a very small amount of silver. You can have 1 gram, half a gram, 2 grams of silver per ton of rock in a big copper mine. But when you mine 1 million ton a day, you produce a lot of silver, and that's what's happening. But it's not driving the behavior of the copper miner where the silver price is, because they're mining with the copper. Not only that, we're already shorting copper. Copper's in huge demand. So we cannot just produce more silver in the world. There's not an abundance of primary silver mines, and all the producer that produces as a byproduct, mostly gold and base metals, they already sit at record metal prices. So they already produce as much as they can. So I really don't see that picture to change a lot. And I think, on the producing side of silver, you're going to see a very flat or declining picture. While obviously at the demand side, we're going to see an increase. And that's what you saw there over the last few years. We are in a deficit. Of course, there's silver above ground available that people are happy to sell at a certain price. There's bullion available. And people selling today, I didn't look, maybe $74, $75. So there are people to sell to fill that gap in. But of course, that has increased from like $4 20 years ago to now $75 today. And will continue to increase at what price people are willing to sell their bullion into the market to fill that demand. Just one more slide and I'm done because I'm already a minute behind. But that's an interesting slide. When you look at the production, of course, Fresnillo is still bigger than us. Remember, we do 25 to 27 million ounces. You had 19 million ounces from La Colorada in the peak years. If we could get Escobal back at 20 or 21 million ounces, obviously very easy to see that we will be the biggest silver producer in the world. We have already the biggest silver reserve. You need the biggest silver reserve if you want to be the biggest producer. But already now, and you see there, we actually have the best correlation to the silver price. And I think it's obviously based on the assets we have, the projects we have, and the large reserve base that we hold. So it just makes a lot of sense that we have the strongest correlation to the silver price. Well, we produce, still about 730,000 ounces of gold. I wouldn't call that the byproduct because actually at the moment, when you look at the revenue, because gold is so highly priced, it's probably about 38% silver right now. Gold is probably closer to 58 to 60, and then the rest is base metals. So while La Colorada comes in, this will flip. At one point, it will be probably about mid-50s to high 50% silver, and then the rest will be gold, depending on the silver-gold ratio, of course. But as I said at the beginning, silver doesn't occur alone. So you can't go to you can't produce 80 or 90% silver of your revenue. That you could do that maybe on a very small mine, but not as a sizable big company. So with that, my introduction is done, and I think, Sam, you will do with Guido the acquisition.
Good afternoon, everybody. I'm Sam Dreyer, Business SVP for Business Development and Human Resources. I'm still clocking up my years here, not quite at the Michael and the Steve and Martin level, but I've been with Pan American for 7 years and continuing this journey. Today, I'd like to share our perspectives on M&A, on our current execution, what we've achieved to date, and some perspectives thereon. So what you'll see in this graph here is over the last 7 years, a series of well-timed transformational M&A acquisitions. It started off in 2018 with the acquisition of Tahoe Resources, followed by the acquisition of Yamana Gold in 2023. And then late last year, we closed on the Mag Silver acquisition, which led us to acquiring the 44% interest in Juanes CPO. So what you'll see is following each of these transactions, we've really been able to really reap the benefit of the commodity price increases, with the most happening after our last acquisition with MAG, with the silver price increasing of 132%. And what's really been key to the success of this is really maintaining our strong financial flexibility. We've been able to be opportunistic when situations arise, and we've been able to react fairly quickly. And this has put us in a really strong position. So not only have we been opportunistic on the M&A front, but we've also been really diligent in being able to pursue portfolio optimization. Since we acquired Yamana over the last two to 3 years, we've been actively looking at our portfolio and really divesting of non-core properties. We've been very successful on this front, and over all of these various divestments, we've accumulated over $1 billion in cash. What this has allowed us to do is we were able to redeploy $500 million of cash from those non-core divestments and redeploy that into the investment in a very meaningful silver acquisition by way of the Juanicipio mine in the MAG Silver portfolio. The MAG Silver acquisition has really solidified and continued to strengthen our position in the silver producer space. Michael just alluded to it in his slides, which showed that, he mentioned it as well. Like if you were to think about adding Escobal, you add La Colorada Skarn, we really are continuing to increase our silver exposure we're continuing to increase our position as a silver producer. And for 2026, we're looking at 25 to 27 million ounces, and we're looking to continue to grow that. So not only did Juanicipio really help continue to strengthen our position on the silver production front, it's really made a meaningful contribution to lowering our overall cost profile. The Juanicipio all-in sustaining cost is expected to be between $2.25 and $4.25 per ounce in 2026. And you'll already have seen in the first quarter of 2026, we've really been able to reap the benefit of that by having a total all-in sustaining cost for our silver segment of $6.63. So really being able to, contributing high significant silver production, but with really high margin ounces. And with that, I'm going to hand over to Guido to walk you through our approach to M&A. I was very fortunate to have Guido join our business development team last year. Guido is a young veteran of Pan American, having been with us for over 17 years, and he's really touched a number of parts of our business. He's been in finance, treasury, commercial, marketing, insurance, financial planning, and analysis. So really great breadth and depth, and very excited to have him on my team. And with that, I'm going to hand over to you, Guido.
Thanks, Sam, and good afternoon to everyone. So as Sam mentioned, my name is Guido Mastropietro. I've been in the company this is my 17th year, and I've just about a year ago joined Sam in the business development team. In terms of, as we go to the next slide, I'm going to first talk about our approach to M&A and then talk about some of the work that we've done over the last few years. So in terms of our approach to M&A, and as Sam noted, we've been really busy over the last 7 years transforming the company. We've really strengthened that silver segment. We've built out our gold segment. We've replaced assets like Manantial Espejo and Morococha, and now a declining Dolores that's in residual leaching, with assets like Juanicipio, Jacobina, El Peñón. Really this battleship assets that are higher margins, large scale. So really focusing on that high margin, large scale production. That's the overriding factor and what we're looking for in our M&A. We're looking for gold and silver, of course, in the right jurisdiction in Latin Americas. Americas is where, Pan American's got a large footprint, a growing footprint. We've got a really strong base, knowledge from our team that's operated in LATAM for over 2 decades. So really feel that that's where we can leverage our expertise, as well as leveraging our ESG, right? We have a really strong reputation in ESG. We bring that to the table in every jurisdiction, really try to incorporate that into how we think about acquisitions and how we think about incorporating those acquisitions into the Pan American fold. As we, in this last 6-7 years, what we've shown is a really creative approach at leveraging transactions and finding ways to unearth and unlock value through acquisitions. With Tahoe, we used the contingent value rights as part of the acquisition. We wanted to avoid diluting shareholders for Escobal, which was a non-operating asset within that portfolio. So we issued 15.6 million, the equivalent of 15.6 million shares in contingent value rights for that acquisition. And then effectively, really deferring the cost of Escobal in that transaction. Same thing with Yamana. We looked at a creative approach to unearth value. In that case, it was a joint acquisition with Agnico, where we really split up the assets in a way that made sense for both companies, and leveraging our expertise and our history in LATAM, and then Agnico getting the other half of Canadian Malartic. Throughout this last few years, and as Sam noted, there was quite a bit of cash proceeds that came in from the sale of non-core assets. We really built out this very large royalty portfolio of high-quality assets, in the copper, gold, silver, really providing more exposure and long-term exposure to rising metal prices, and really another catalyst in the portfolio that's listed here. We also hold a number of limited strategic investments. There's 3 right here that we're going to talk about. In 2017, we acquired shares in New Pacific Metals. New Pacific is advancing 2 very promising silver deposits in Bolivia, Silver Sand and Carangas. We also have 14.7% interest in Galleon Gold. Galleon Gold has about 1.5 million ounces of gold adjacent to our Timmins West mine in Timmins. And then recently, there's been an announcement on Cadillac Mines. We turned our ownership interest in the Larder property that came as part of the MAG transaction into what, at close will be a 6% interest in the Cadillac Mines. Cadillac Mines is advancing the Caradison project, the restart of that mine, which has around 3.7 million ounces of indicated, 4.7 million ounces of inferred. So another very prominent gold development stage opportunity. So with that, I just wanted to say that as we go through the next few years here, we're really looking to build out on that strategy, build out on our history of executing this growth trajectory that Michael showed earlier, this increase in silver production, maintaining our gold production. So we're really anchoring that with the projects, this brownfield projects that Scott and team are going to talk about. This is the La Colorada's current development. La Colorada has the potential to be a world-class mine on the silver side, 19 million ounces of silver in the 2030s. That could put it very much as the largest silver mine in the world, primary silver mine in the world in that time. And then anchored on the gold side with Timmins, the Timmins Camp project that we press released about earlier today. There is the integration of those satellite deposits, really building out what we think could be a long-term production profile here in the Timmins Camp. The Jacobina optimization study, which Michael talked about, it's really a lot of studies. And then this rounding it up with brownfield exploration success, continuing the history of brownfield exploration success in our portfolio that Michael has talked about, while retaining this large-scale silver optionality. I mean, we have Navidad, we have Escobal. Those assets are in the portfolio still. They provide that optionality long-term on our silver side, and complementing that with opportunistic M&A. And with that, I will, before I pass it on to Scott, questions? Yeah.
I think this is working, but
I think try again.
Hello? Yeah. Okay. So, Ovais Habib, Scotiabank. Just a quick question on, you mentioned you've had great success in terms of M&A over the last couple of years. You have all this optionality. Question keeps coming up is Pan American done in terms of M&A? Do you see more M&A in the future? More non-core asset sales? Any color on that?
Yeah.
If you look at the leadership of this organization, Ovais, I think you'll notice that transformational M&A is pretty much one of the pillars of our overall strategy. We have our team we've been able to build out our team, and we continuously look at M&A opportunities. I think you'll notice through the presentation we have all these different pillars of growth, pillars of return to shareholders. Like M&A is a key one, and it's not. I mean, on the silver space. I mean, you know very well. Opportunities are scarce. We've been very disciplined in making sure that we actually we execute on quality. You'll see we've over the last 7 years we've really sort of been building cornerstone assets here through Jacobina, Juana CPO. We want to continue to be opportunistic, but we want to be really disciplined and really look at the quality. M&A for sure is definitely a core part of our strategy, and it's something that we will continue to execute on, in addition to looking at our portfolio and optimizing it in ways. And Michael would like to add a few words to this as well.
For sure, and that's a very important point. But look, I'm a very firm believer to build stronger, bigger companies in the mining space. The future will require that. Mining is complicated. There's not a lot of people out there that can successfully doing it. Capital is not scarce right now, but it will be again. And it's not easy to build these big assets out over time, because the capital numbers will increase substantially here, because everything is going to go underground. In 20 years, we probably mined most of the open pits, or at least discovered them in the world. And you're going to have to build very, very large underground operations like the La Colorada skarn, so very productive mining methods, etc. So a lot of technical knowledge needed. That's one point. You can't just count on shareholders continuously injecting money in this business. I know that the exploration business works like that, but I think it's getting harder and harder there as well. And we as a company, large company, have a responsibility, and you saw some examples there, to inject money as well to make sure that these projects get discovered and developed for the future. And the last point is, the last time we had to go to our shareholders to actually build one of our assets was in 2009. I have no intention to go back to our shareholders for financing of a project. I have, firm belief that we generate enough cash to build any kind of size of project that fits to Pan American. So that's really my belief. So how do we achieve that? Is obviously to have better, higher quality assets that have longer mine lives, and we can find them. And I think it's amazing that we found the world-class asset at La Colorada, but just finding it in your portfolio, I'm a geologist, but I've never seen that before, that you just discover a huge deposit below your existing mine. So then M&A really comes in there. Now, you have to be very picky. We only did 3 large transactions over the last 10 years. They have to be accretive, so you can structure them in certain ways. But we look at dozens and dozens and dozens of opportunity, and we let them go pretty quickly when we don't see what we're looking for, like long mine life, assets that make money at way lower metal prices. And the most important, we need to see the exploration upside, because everything that is already discovered, you're going to have to pay full price for it. And so that's what we do. And when you put that all together, it's not possible without M&A to continue that trajectory. But you cannot just become a deal junkie here and do whatever and buy whatever just to increase those ounces. So it's a lot of work, and it's kind of a slow grind to go through all these opportunities. And don't get me wrong, the market doesn't really appreciate when you announce a big transaction that day. But I think we have shown now again what it can do when you do it at the right time with the right assets, and definitely try to continue that trajectory.
Any jurisdictions you would stay away from?
Oh, there's many jurisdictions I would stay away from. Luckily, many of them don't have silver, so we don't have to go there. Look, I think we're obviously very comfortable in the Americas, and that's really what it will be for us. I mean, just the fact that you have hardly any time difference, that we know the places for many decades now. It just makes it so much simpler. There's, as I said, there's no silver in West Africa or so it's no places. And it's not because there's lots of people who have been very successful in those places too, because they know the places. We don't know those places. We're not going to go there. And it just doesn't make any sense, right? So, of course, so when you look where silver is, there's only a little bit in Australia. Tough to get our hands on that. Russia produces a lot of silver. Obviously, it's a no-go. China's difficult, but lots of really small mines on the silver side. So at the end, when you look, it's really LATAM. So it will be the Americas for us.
Hi. Jack DiNardo. In terms of future strategic development, where will the emphasis be in terms of gold versus silver? I know that from a revenue perspective, gold outweighs silver, but from an ounces perspective, it seems most of the activities on the silver side. I'm, again, just curious.
Yeah, look at the end. Obviously, like that. We need a lot of silver. We showed that in the slides in the world, and it's one of our responsibility to deliver that silver to the world so that the world can advance and continue the way we should go, and we can produce that clean energy and electrification that we need. So, but you can't find just silver, as I showed. So for me, it was always this step change. Sometimes we added more silver, then it came with a bit more gold. La Colorado will bring in a bit more zinc, by the way, as well, a critical mineral or metal for steel production. And then maybe there's again a bit more gold coming, a bit more silver. So it's just a picture in time, really. We are a silver company. We are the biggest silver reserve and resource, and we have it in our name. I think it will always be there. But for me, if you add profitability is really what I'm looking at the end. If there's a bit more gold coming in right now or a bit more base metal later on, the big picture, will be a silver company. When you look at a certain time at the picture, it will be maybe a little bit different. And, we went as low as probably 20% silver revenue only. When silver was underperforming gold 2 years ago and we had more gold production, that happened. It's not where I want to be, but if you are somewhere between this 35 to 55% silver, I'm very comfortable there.
Thanks. Wayne Lam with TD. Michael, just wondering, if you think back to the Yamana transaction, when you guys consummated that deal, you guys kind of cleaned up the portfolio a bit, shelved some of the shorter life assets. Now, as we think, a few years later, if you look at some of those Yamana assets, they're also becoming a bit short life as well. When you look at, Cerro Moro, Florida, Peñón, stockpile depleting, as the portfolio kind of consolidates around some of these larger cornerstone assets like Juanicipio, La Colorado Skarn, Jacobina, how are you thinking about just those shorter life assets and, how are you managing the resource consumption within the firm around those the bigger portfolio?
Yeah, look, this year we spent, I think, $135 million in exploration. Most of our exploration is brownfield or within the district, so we can truck it to our operations. And so, you mentioned a few names that are shorter life. I'm not in agreement with all of them. I don't think that, Peñón had always like 4 or 5 years historically of reserves, but it had that 20 years ago. I think hopefully it will still have it in 20 years from now. Of course, it gets harder later on, but you just have to spend more money. There is definitely the opportunity there to get to such a long mine life. Sure, when you look at Florida or especially Cerro Moro, that's a bit harder because the assets in Argentina, in that part of the world, don't go that deep like we see in Peru or in Mexico or some in Chile. So you don't have that extension. There we find satellites in different distance, and of course metal prices will help there for a while, but definitely that's one that, generates nice cash flow, but not that many ounces anymore. Of course, Jacobina is going to be a battleship asset for us for a long, long time, and one of the main reasons why we wanted to buy Yamana Gold. So I think it's not just from that acquisition, it's just a continued quest to expand assets that we already have, maybe acquire another big asset, but then sell off the smaller assets if we can't find a much, much bigger resource base there. But as I said, look, I'm together with Steve and Martin, we thought in 2006 that we have to shut down La Colorado in 2008. And now it's one of the biggest discoveries on the planet. So you can't give up too early neither. Geology has been and will be always very important in our company. I think he has a question. Just one quick.
Thanks for taking my question. Larry Liu from CIBC. Sam and Guido, I know earlier you touched on the royalty portfolio. It's grown to quite a big size, and I know, Michael, you've talked about how Pan American is a producer, not necessarily a royalty company. Eventually, there could be opportunities there. I'm wondering, how should investors think about the royalty portfolio and maybe push it a little bit further? What kind of value should we look at it from that perspective as well?
Yeah, I think if you look at the list, it's back up here. This is something we've been generating over the last 3 years. We've added a few others, so as you can see, 5 others. The transaction details are not public. We're continuing to add royalties to this portfolio. Not really in a rush to necessarily sell it. We don't need the funds right now, but we think that the right time is going to come when it will add a lot of value to our stock. These are copper, gold, silver. Time has worked really well in our favor. Some of the royalties have been going through additional permitting and additional progress on the technical reports and the progress on the studies to build those assets. So we think that time is on our side on this portfolio, but really it's just building out the portfolio before we do monetize it.
And just quickly, then we have to keep going, if not we still here by 7. But the last time we had a royalty portfolio, which we always create the same way, by the way. There are not royalties from our producing assets. There are royalties when we sell off an asset. We always keep a royalty. And before I was CEO, I did the business development, and I kept royalties the same way. And last time we had a portfolio, we started Mavericks Metals, if you remember. And I think that got finally sold at the end to Triple Flags. When you look at the value from the beginning to the end, I think we did about 12x on our money with that transaction. So there's very smart ways to deal with that you can create value, especially if you don't need the money right away. I think there are way smarter ways than just selling it to a large royalty company. And I'm sure Sam and Guido will come up with a way to generate way more value from those.
Thanks.
Thanks, Guido. Am I connected here on the mic? Good afternoon, everyone. And it's great to see you again here after a couple of years. My name is Scott Campbell. I'm the Chief Operating Officer. I was named COO in October of last year. Before that, I was the Senior VP of Operations and Projects. Michael at the onset mentioned gray hair. I've grown a couple gray hairs since I became COO, but it's all good. I'm a firm believer that the best years of Pan American Silver are yet to come. And it's a great company, as you'll see today. So let me get to my slides here. A big part of my job is safety. A big part of my job is commitment to make sure, to ensure, to do the best that I can, that our 17,000 employees and contractors have the tools, the equipment, the training, the opportunity to work and execute their tasks safely, as safe as possible. I don't think you can declare victory when it comes to safety until you get to 0 incidents. It's a long road. It's relentless follow-up and training and communication. I'm encouraged by our safety results and the graph that we are getting better. There's ways to go yet. A big part of our culture that we're trying to change at Pan American Silver and this continuous improvement quest has to do with what we call doing safety differently. It's a school of thought. It's really a new language developed by Dr. Sidney Decker and others, who the message of doing safety differently has to do with humans are going to make mistakes. Regardless of training, humans are imperfect. The objective there is to fail safely. So humans will drop the ball from time to time, but the objective is to really ensure that you've got other safeguards built into your system. So if and when a human does fail, you don't get an accident. Nobody gets hurt. So this is part of a plan that we implemented about 2 years ago. We're rolling out safety differently, this culture, this language, across all of our sites, and we're about 80% complete in rolling that out. We've also implemented a number of initiatives across the company to improve our safety performance. Some of them are, I'll just mention a few of these. Critical risks. Critical risks have to do with those risks that could result in severe injury or a fatality. We're focusing on these critical risks. We've established 10 across the company, and every mine site has the latitude to expand on that list. There are some risks that are site-specific. And so from corporate, we've established 10, and every site contributes. Some of those fall into the site's sphere of influence, and some of them do not. We're working on collision avoidance systems. We've got thousands of pieces of mobile equipment in this company, in every country, the 8 countries where we operate, and our 10 or 11 mine sites. We were implementing fatigue management systems. We've had a lot of success with that. Another thing that we're pretty proud of, and we should be completely rolled out by the end of this year, has to do with electronic detonation of blasting. We're getting away from the manual use of tape fuses to detonate blasts. And we've also implemented centralized blasting, where everyone underground evacuates to the surface. We set off the blast, and then we go back underground at the end of the shift, or at the end of the blast. So a lot of success with that. It's a long road, but we're getting there. We strengthen our corporate safety team. I can tell you that of all my direct reports, if I don't spend more time with him, it's very close. I spend a lot of time with our VP of safety. We have a corporate team, and we have a safety team at every single site, which reports solid line to the operations manager or GM. But there's a dotted line to the corporate VP of safety, and he's strengthened his team. He sits in Brazil, and spent an awful lot of time with him. I was just with him last week and visiting our sites in Mexico. So root cause analysis, again, trying to find out why things happen, trying to find out why people did what they did. Every mining company has had incidents or accidents around conveyor belts. If I could just take a recent example that's happened to us. We had an injury where a worker was cleaning a conveyor belt, or the conveyor belt was still in motion. But if you bother to take the time to ask the questions, why was the conveyor in motion? Why did that really happen? He did that for a reason. Maybe the conveyor belt was going too quickly, or maybe the chute was too small. These are all engineering improvements that we have to, as owners, look at and really evaluate and correct before it becomes an accident. So I'll walk through the guidance slide. So 2024 and 2025, we're thrilled that we brought our silver and gold production in within guidance. Those are successful years. So far this year, Q1, same story. Happy with that, gold and silver, and from a production perspective and from a cost perspective too. We're within guidance, so very encouraging results, and we'll continue that through to the end of the year, 2026. This is really, our guidance, of course, is a function of our budgeting exercise that we do company-wide, Q3 and Q4 every year, where the regions get together and look at lessons learned from share opportunities, look at past success, and then write the formula for the future. So far so good in 2026. I'll go through the operations quickly. Some colleagues will get into some deeper color commentary here regarding Juanicipio, La Colorada, Jacobina, and Timmins here after I step down. So La Colorada, tremendous success from an exploration perspective, from an operations perspective too. Improved ventilation that we implemented a couple of years ago. La Colorada has really paid dividends. We've renewed our fleet at La Colorada, strengthened the team. We've got a capital allocation request approved for $250 million to get the 588 decline going on the Skarn project. Work starts in Q3 on that effort. So we're really optimistic. Of course, we published our PEA a short while ago that Michael already mentioned. And we're on track to produce 6 million ounces of silver this year from La Colorada. So it's going to be a fantastic year. Juanicipio, a new deal for us. We've been operating in the neighborhood of Zacatecas for 30 years. Juanicipio is about 2 hours down the highway from our La Colorada project, La Colorada mine. And we've really established a constructive relationship with the Fresnillo management team. We've got a safety committee going, operations committee, regular site visits, cooperation happening, and it's going really well. It's outperforming, as you can see from the numbers. They've got a conveyor project, a 4.2 kilometer long ore transportation underground conveyor, and that's progressing on budget and on schedule, and it hasn't interrupted day-to-day operations, so it's very encouraging. We're happy with how that project's being executed. Jacobina, on track to produce 185,000 ounces of gold this year. Our first mine in Brazil, and a young workforce, very motivated workforce in an attractive jurisdiction, fairly easy to recruit people to work there. And we're really happy with how that's going. A lot of opportunities that Steve will elaborate on, And it's just a fantastic asset and a fantastic jurisdiction. So we're really, really excited about that and leveraging our experience in the Andes and the Cordillera to implement best practices at Jacobina. When I think about El Peñon, I think in my career, I can't remember a more cohesive team that I've ever worked with. El Peñon, 2 hours from Antofagasta, there in the middle of the Atacama Desert, one of the driest places on earth, really surrounded by giants. We've got the Escondida copper mine, open pit copper mine, up the highway a little bit. Beside that, the Zaldivar open pit copper mine. We've got a team that's been working together for a couple of decades, through the Yamana acquisition, and they've stayed on with Pan American Silver. They've really signed on to the Pan American Silver culture. They work together. It's a really good blend of young talent with experience. And 2 hours from, seaport, good land link, industrial tertiary education available in Antofagasta. The next generation we're hiring. So it's really, really great. Year after year, reserves get replaced, successful exploration programs, and just a great team and a great place to work at. Some innovative technology in the tailings management system there. Of course, the dry, arid environment really, really helps at El Peñon. In Timmins, again, Timmins has had a fantastic Q1 this year. We've, the team has become robust. The operational leaders will talk about that here in a bit. But there's a lot of potential there, a lot of upside to Timmins. I'm really, really happy with how that's going. The team, the technology, the improvements. And it's just a real success story so far this year. So I'm really, really glad and really proud of what we're doing in Timmins. Shahuindo, I was lucky enough to be the GM at Shahuindo a number of years ago, and it's a very, very special place. It's our only major open pit. We do have satellite open pits at other operations, but Shahuindo is exclusively open pit, leach pad, and it's a pretty simple flow sheet. There's no crushing or screening. It's just a run of mine stocked on the pad. And really the key to Shahuindo has to do with synergies associated with building waste dumps, leach pads, and closing the pit. So we're trying to minimize our footprint. We've got a bunch of creative engineering solutions to do that. They're saving us a lot of money, and that will continue to follow us, into the next few years. So some good creative, geotechnically sound solutions to reduce our footprint and to shorten haul distances and really maximize our recovery and gold production. So Shahuindo is about 3 hours from the city of Cajamarca, 2,500 meters above sea level. Florida, down in Chile, we leverage a lot the Chilean culture. Of course, they're siblings, Minera, Florida, and El Peñon, siblings. Of course, Florida is mainly a gold producer, not a lot of silver being produced at Florida. 2 hours from the capital city of Santiago on a paved highway. It's a very attractive location for people to work. I am really happy with how Chile is a pretty demanding jurisdiction when it comes to collective bargaining agreements. And we've got a total of 7 unions between Florida, the Florida mine, and the El Peñon mine, who generally expire every 3 years. So if you've got 7 unions, on average, we have to negotiate these every 2 or 3 per year. And we've got an incredibly strong team to do that, who really knows the rules, where the goalposts are in terms of these negotiations. And they've had a lot of success renewing these timely, punctually, and constructively between the union members and ourselves. So that's been going really well the last few years. Not easy. Cerro Moro, some good news. We've got pretty proud of our discovery of the Natty Condor satellite open pit, which we started development of about a month and a half ago. We blend ore from that open pit with the underground resource in the process plant. We also completed a small expansion having to do with our tailings discharge system that grew out by about 10% last year. So yeah, the Natty Condor, the road is constructed. It's in very good condition. It's an all-weather road. Some good sound engineering behind that, and that'll prolong the life. Natty Condor and other deposits will prolong the life of the asset by about 18 months, hopefully longer. Huaron's a polymetallic underground mine located about 4 hours from Lima, Peru, up in the Andes at about 4,500 meters above sea level. It's been producing since before World War I. And we acquired this. This is one of our longest held assets, over 25 years, close to 30 years. We've had a lot of success there. The thickened tailings plant is working as per design. Costs are aligned with expectations there, and there's exploration upside to it. Huaron. A lot of knowledge, a lot of local knowledge in that part of Peru. Central Peru's been, of course, mining silver for centuries. So it's all good in Huaron. And then finally, San Vicente. arguably our most remote mine, it's located in Bolivia, also at 4,500 meters above sea level. Really proud of the safety there. A year and a half since the last lost time accident at San Vicente. Got Wi-Fi underground, drones, very motivated workforce, good relationship with the unions, and just very predictable, steady state production. Just San Vicente continues to deliver. You know, it's the smallest operation, but it's pulling its weight, punching above its weight, maybe. And finally, just a couple of comments about the team before I run out of time. So, the three people on your screen here are three regional operations vice presidents. And so we've divided this up based on geography, based on operational similarities, and based on other factors. There are a number of ways that we could have divided this up, but this is how it is, and I'm really happy with how this is. We're just about where I want to be with this. They've got underneath them country managers and then, country managers reporting to these VPs, and then general managers underneath those. And so I travel a lot, spend a lot of my time on the road to meet and really develop this team, and I'm really proud of how things are turning out. So that's it's a very, very strong team, world-class team. From the left, which Dario's been with the company for a couple of decades. Christian in the middle, down in Chile and Argentina. He spent a long time at Yamana and really leads that team. His three mines were the three used to belong to Yamana. So he's really perpetuated the Pan American silver culture, and he's got it. He's taken it to heart. Kelly is a new hire, heading up our efforts here in North America. So that's it for me. I'll hand off to Chris Emerson for a deep dive on Colorado.
Hi everyone. I think you can all hear me. That's great. Yeah, we've got a bit of technology. I think some people may have been here a couple of years ago and saw this, so we'll get straight into it. We're going to be talking about La Colorada. By the way, I'm Chris Emerson, Senior Vice President of Exploration and Geology. Been with the company on my 11th year now, so and what a journey it's been. So we're going to look at La Colorada first, and we're going to a bit of the geology. Of course, we're here in Zacatecas. We're going to zoom in. You've got Durango to the north. Zacatecas is probably about 155 kilometers from La Colorada. Of course, now we've got a new one there, Juanicipio, which we're going to talk about in a bit. But really, I'm just going to swing around and we're going to look at Zacatecas as such. Obviously, we're going to be zooming in on La Colorada, and we'll look at the regional context first, where really we're on the Sierra Madre, and this is the silver belt of all silver belts. Starts up in the southwest, comes down through Mexico here, and we're right on the edge here. You've got Fresnillo, a big camp, which we'll talk about in a bit. But really, we're on the structural northwest southeast, and you can see all of these major deposits which line up on that trend. You've got San Martin sitting 30 kilometers as the crow flies from La Colorada. That's a skarn deposit, by the way. So we'll zoom in a little bit. We've got more of a district kind of geology. The green is limestone, and then you've got these browns, which are the volcanics. Now, the volcanics are where the main silver deposits sit in the Sierra Madre, which is the lower and upper volcanics. We'll get into a little bit more detail on those as well. But now, nearly 9,000 hectares sitting in and around this area, and La Colorada sitting right in the center there. We're going to zoom in and take a real look at the local geology now. That's going to see, here's a surface map. Here we have it. The red are the main veins that we have from Recompensa, Amalio, the HWNC and Christina. And over the last 6 months, we've been releasing press releases on the discovery, and we're going to go into more detail through the video here. And the green outline is the skarn which sits below all of these veins in the limestones. Very quickly, we'll give a quick overview of the site layout. We've got the tailings down in the south. You've got the main plant in the middle there, and the shaft, the main operating shaft in the center. The new Guadalupe shaft, which is now giving us that ventilation, which is the Scott was talking about, the return back to that 6 million ounces of production. So here we are again. Again, we've got those red lines, which are the main veins, and really the success story, which were released in March, are these new veins that sit over here to the south and to the east. Drilling has been ongoing there. We're doing around 80,000 meters a year, which is, giving us this discoveries that we've been seeing. Here we've got all the silver grades. Here are the main mines, and you see the HW, NC2, and the new Mariana, the extensions of NC2 going east. And really, all of this is still open as we go further east. To the south, Christina, which are these larger regional, larger structural plays in there as this thing moved out, gave extension and allowed the fluids to come in. So here we have the silver grades. Here we're now just putting on the current principal vein reserves and resources, the shapes there, Mariana, we've got some on the Christina, and then we're going to move into showing some more of the principal or the secondary structures which we've been coming out with recently, Philomena, San Geronimo systems where we've got some inferred, and that's where really a lot of the successes happened, as I was mentioning, kind of south of that NC2. And then the blue, and we're looking above that, was the skarn, and we're going to, again, come into a bit more detail. Here's a very quick slide to show you how successful we have been through the drill bit here, up to nearly 80,000 meters of drilling. We're sitting at around 90 million ounces of silver, and certainly the inferred resource in mid-year 2025, we had another 50 million ounces of those southerly structures, and to the east on the NC2 and Mariana. So success, definitely. Again, there's those blue shapes of the skarn which sits below in the limestones, and then all of these different structures which make up that reserve and resource for the veins. Here we're showing the new veins that we've discovered. So these are not in the mid-year 2025 resource. These are new structures that we've now defined, and they will certainly be coming into the 2026 mid-year, which we're working on at the moment with the technical services team. So lots of upside from what we've been releasing at the moment. So December 25, March, September, we're coming out with some really nice results. Here's just a few examples of those results. Looking at the Mariana, this is a long section, and we're looking at multi-kilo, half a kilo, and so really strong as we look across there. And we're going to be showing that the exploration potential as we even push further outside of that long section to the east is there as well. This is the NC2. Again, just showing you some of those examples of some of those drill results that we've been releasing, up to 10 kilos, over 20 centimeters, and multi-kilo, 9 meters at 10 ounces, and with the lead zinc as well at over 15%. So now we've backed out. Again, we're looking at that vein array. Now we're going to focus a little bit on that new veins that we have been finding, and multiple veins. We're going to flip and give you just a quick cross section across that ore, and I'll just stop it here so I can explain it a little bit more. So here we have the NC2 and the Mariana. They're in the reserve and resource. Here we have the two galleries that we are exploration galleries that we're currently developing south on the 588 and the 488 level. And actually, Elena vein, which was a new vein, a blind vein that we found as we developed through that on this deeper gallery. And then we're heading towards the Philomenas, the Nicholasas, and all of those structures to the south. The larger structure, the Christina, again, is still open to the east, and that's where we're heading to on those exploration. That's going to bring all of this potential resource into production. So we'll flip back out. We'll zoom into just one of those, which was Philomena, which had some very good results, which we released. As I mentioned again, this is a new vein that we hope to bring into resource. I've got 2 machines just drilling on this at the moment, with over 15 drill machines going at La Colorada. So I'm going to pause it there, highlight the 5 meters at over a kilo silver and a combined 10% lead and zinc. Just one of these areas that we've been drilling. And this is actually specifically very good because it's at this contact between the limestones and the volcanics where we've started to see more of a replacement style mineralization, which is great for us. and all of these others we've been releasing over the past year. So lovely upside in all of those new veins that we've been discovering, and looking at where this potentially could go. So back in September 2025, we released S1025. Now, as you can see, that went through the veins. It also hit CRD, which is carbonate replacement style deposit, and also went into skarn. That's sitting 450 meters over from 903, which is one of the skarns in the current resource reserve. That's over 450 meters to the east. We found skarn again. So for an exploration geologist, this is really good news. So thought it was worth highlighting to really show you that we have an expansion, and we're hitting veins and we're hitting skarn further out to the east. So now we're back to that overview, looking down at the deposits, and now we're going to talk a little bit about skarn, give you some details as to where we are with that, and then Martin will come in and give you some more details on the recent PEA. So blue, the skarn, the updated the resource sits around 2024. We've got over 45,000 meters of new drilling that's got to come into here. The dimensions of this, I mean, the skarn is 1.6 kilometers, 700 meters by over 900 meters in depth. We've got I'll show you some drill results with over 300 meters of sulfide. It's an exceptional discovery from 2018. Going to swirl that round and show you those three different deposits that we have. We call the 901, 902, and 903. Martin's going to touch on this a lot more, but then that although new vein inventory that we'll find, that resource that we're finding over at the top, has really changed our viewpoint on how to mine this in the future. So we're going to come back round. We're going to show you where all the new drilling is. That's the magenta here. All this new drilling that's been happening, infill drilling the current resources to bring some of those inferred up into indicated, and doing some exploration slightly off to the east at S10. And when we look at the skarn, we've described this as you've got the volcanics, the pink at the top, and below that you've got the limestones, the blue. Now, when we get hot intrusives coming up, we then, these hot fluids go into that limestone, create alteration, these garnet, this green skarns around these intrusives, and that causes the porosity and it allows all of the sulfides to come in afterwards and mineralize. And that's what we have here. We have a very classic mineralization, intrusive, the pink in the middle, the deposit sitting in and around these hot intrusives, which have been mineralized and giving us the sort of resource that we have to date. Here's a little example of some of those drill holes from 2018 that we've been releasing over these years. I mean, when you're drilling 380 meters with a combined 54, 2% lead and nearly 3.7 zinc, I mean, that's pretty phenomenal. 439 meters of sulfide, 250 meters of sulfide with exceptional lead, zinc, and silver results. So it's been a real pleasure to work on this deposit. Again, mentioning we got those 45,000 meters that are going to come into that resource reserve. That's going to give us over 360,000 meters of drilling into this. So we've got a lot of confidence in what we have here. And in true weatherman style, the sun is always shining in La Colorada. Over to you, Martin.
Thank you very much, Chris. Okay. Fabulous. Martin Wathorn. Hi, everybody. Welcome. Good afternoon. Let's go advance a little bit. This is the 2024, what we had in 2024 with the sub-level caving idea, and we thought we, had a really good plan. Caving operations, caving mines create subsidence zones, and then we found all these fabulous veins that are above in the east. So we realized that we needed to take another look. So we're going to long hole stoping as being the mining method, and I'm just going to pause it quickly here. Okay, so this is the La Colorada, the expanded project. We have the orange color, which is the existing mine, the reserve, We have the lighter blue or the turquoisey color, which is the vein resources that are in the east. And then underneath that in the blue is this much more massive skarn deposit with hundreds of meters of width as we go. And you can see the total resources that are in the table at the bottom. So that's what the overall project looks like as we go forward. And is it moving? No, it's not. Yeah, here we go. So this is a bit of a timeline of how the development of the La Colorada skarn is going to look. And you can see here that we've got this ramp that Scott mentioned that's coming down. This is called our 588 ramp that the board of directors just approved, and we'll talk a little bit more about that later. These two blue vertical lines in on the right-hand side, those are the shafts. It's a production shaft and a ventilation shaft that are going to come down. We're calling them the east shafts. And we're going to go to our board for approval for those later in the year when we've done a bit more work on it. And you're going to see down here in the bottom left-hand side of the screen the cumulative silver production of the whole expanded project as it goes forward, and the timeline on this horizontal red and green bar. So I'm just going to go forward, and you can see that we're mining mostly the reserves right now as we go, and we're developing the mine, and now we're just starting production. We're in the sort of pre-production ramp-up phase of the skarn longhole stoping. You can see some turquoise color coming in the vein mine above, and you can see these stoping blocks. Now, each one of these little blocks, for reference, are about 30 meters high. Well, they are. They're 30 meters high by 30 meters by 20 meters. So they're roughly 50,000 tons every time one of those comes out. And you'll see as we advance forward, we're going into the green area now, which is the higher grade payback period, and we've already gone over 100 million ounces of cumulative silver production as we're rolling this forward. And we're now right into the green squares. Those are the high grade areas of the skarn deposit that we're going to take out to get our payback in the initial phase of the mine production. So keeping on going, you can see that the vein mine above is going. We're continuing to develop the mine, and we're now into what I call the full production period. And the full production period, we take about 8 stopes are in full production at any one time, being mucked, of 24 stopes in this full cycle between drilling, blasting, backfilling, that type of thing. So that's 24 stopes, 500 tons a day roughly per stope. We get to 12,000 tons a day of skarn stope production, plus 1,000 tons a day of skarn development production, plus 2,000 tons a day from the combined vein mine reserve and the vein mine resource, which is above. And that's how you get to 15,000 tons a day for the skarn. And you can see that cumulatively for the whole mine since 2026, the cumulative production has now gone above 200 million ounces of silver. So now we're running forward. We're sort of finalizing the vein mine production. The reserves are mined out essentially, and we're finalizing the resource above, and we're continuing to very sequentially mine out stope by stope the vein. And you can see the silver production going up to 300 million and on the way to almost 350 million ounces throughout this life of project that's going to go all the way out to 2068. And that's just the I'm not going to be worrying about that, but that's kind of how it goes as we go forward. And then we're going to do a little bit of a spin around here just to see just how massive this skarn deposit is, hundreds of meters across, compared with the little veins that we're mining, above. And those little veins are small, but they're super high grade. So that's kind of the idea of what this project looks like. And we see the sort of material handling system coming up here now with the production shaft and the haulage levels, and lots of ventilation required. It's got deep hot mine, so we need big shafts to get all that air down. We're going to need a refrigeration plant on surface. And then we're going to spin it around. You can see the topography coming in now, what it looks like above, and we're going to spin it up to see what the surface of the mine looks like. So now we're up on surface, and we have the east production shaft and the east ventilation shaft. They're together, and the yellow ribbon that's stretching across, that's the overland conveyor that will go to the process plant. And now we're just going to go past the south ventilation shaft and the paste backfill plant that are there. And we're going to come now, continuing on the overland conveyor. We're going to go past the new electrical substation that we'll need. It's going to need a lot more power to run this big operation. And we're into a 24-hour live coarse ore stockpile storage. So part of the underground development, there's going to be a gyratory crusher underground that's going to take it down to 80% minus 82 millimeters. And then onto this coarse ore storage. And then from there, it's going to go into the grinding circuit, which is a SAG mill, ball mill with a pebble crusher. And that's coming right up. You see inside the plant building here now. And then from grinding into selective flotation, concentrate thickeners, concentrate filtration, concentrate storage, and into the tailings thickener, and then some with the tailings off to the tailings, some to the paste backfill plant. And now we're going into the camps and the other sort of surface infrastructure that we'll need. And I'll just stop it there quickly. That's a 1,000-person camp that we're going to install for now, with the infrastructure, the truck shops and the offices that are all associated with that. So we'll just let that one run out. There's the storage facility. It's actually in the south part of the property, even though it's showing in the top part of the page. Great. So we'll now go back to the slides. And if we go to the slides, this slide is in your package, but Chris covered it, as is the next slide, so I won't dwell on that. The next slide is essentially showing the comparison between the PEA, which I said was a much larger 50,000 ton a day sub-level caving operation, versus the sort of revised approach that we had, much more conventional, lower risk mining method, lower initial capital, higher NPV, higher IRR, and you can see the financial metrics of the operation on that slide. And also on this slide, as you saw, very long life, still large scale, very low cost because of the credits. The zinc credits are incredible. The zinc and the lead credits really bring the silver AISC down. $5.2 billion NPV 5% at our upside case metal prices, which is 75 silver, and at our $45 base case, it's a 2.6%, 2.6 billion NPV 5. So moving on to the profile, the silver production profile is in the top chart and the zinc production profile in the bottom chart. And the opportunity here is to extend that higher grade payback period for the project. And that is going to be a combination of the high grade vein discoveries and more exploration in that area that Chris talked about, as well as continuing to explore for more and more skarn mineralization, which is looking extremely promising right now. Zinc production, very large zinc mine, 240,000 ton a year zinc mine in that initial period. This slide is a bit of a demonstration of where we think those discoveries are going to come, and if I draw your attention to the right-hand longitudinal section where it says new vein discoveries, that's going to the east. We think there's a great opportunity in that area, and also to the east in the skarn as we move along there to drill more at depth. There is some optionality to still do some caving, which may be in new discoveries or maybe deeper below where we are right now. So we will retain that optionality. La Colorada right now, if you look at it on a reserve and resource basis, is already one of the world's largest silver deposit. It's right up there with Fresnillo. Graph chart shows it. And also the expanded La Colorada mine, if you look forward into the future and compare it with other operations current, would be the largest primary silver production in the world. It's right up there with Juanicipio that we also own 44% of. So this kind of shows the evolution of La Colorada as a major primary silver mine, going from where we are right now to a very low cost, large production silver mine in the future. A complete transformation of the mine. And also, as I mentioned, a very large zinc producer as well. We talked a little bit about long hole stoping. Certainly, one of the opportunities that we're looking at right now. We're working hard on advancing our engineering studies. We're working on a geotechnical domain model right now. There may be some potential to expand the sublevel interval beyond 30 meters. That would mean a lot less sublevel development, or some less sublevel development, depending on how far we can go with that. That's certainly one of the things that we're looking at. Some different engineering studies. We're doing a lot of test work on paste backfill as well right now, looking at cement contents and strengths and what we can do in terms of sequencing. There's probably some opportunities in that area as well. The other opportunity would be when the skarn infrastructure is in place, to look at expanding the high-grade vein production so that it would be a higher percentage of the overall production, and that could increase the silver output too, or at least maintain that silver output for a longer period of time beyond the initial few years. This is the very conventional flow sheet that we saw in the video for the skarn. A few of the things we're studying right now. One of them would be whether or not we should use the existing plant to process the vein material. There is an opportunity to perhaps get higher accountability for some of the payables by putting the vein material through the existing plant, particularly for gold, because the gold gets quite diluted. The skarn doesn't have, or has very little gold in it. The vein mines, as we look to the east, are quite interesting, becoming more interesting in terms of the gold content. So that's a trade-off, as well as whether or not it justifies having a copper circuit in the flotation plant that we would switch on from time to time. Not a big addition to the overall NPV of the project, but it could be worth doing and switching on and off depending on where we are. And this is the capital estimate, 1.95, that we've been working on with Worley, as well as a lot of other help from really first-rate engineering companies. Oh, sorry, and I probably should have mentioned on the capital side of things that we intend to delay the expenditures on the plant. The critical path is always through the mine in this project, so all the mine development, decline, shafts, that's all critical path. The plant, we've got time to defer those expenditures to just in time, so that we help our overall rate of return and NPV on the project. And just on the decline, the board approved $265 million to do this, the decline. It's going to be a large size decline, 6 meters by 5.5 meters. We're going to be able to use 65-ton trucks, articulated mining trucks in that decline. The rest of the development will be 5 by 5. And we'll also put in the permanent dewatering infrastructure. That's why there's so much money there. There's a lot of dewatering infrastructure that needs to go in, as well as the power upgrades that we're going to need to be able to power all of that and the ventilation. So that essentially concludes my presentation. Yeah. Q&As?
Hi.
Hi.
Matt Murphy with BMO. The first question, just you sound like pretty excited about this opportunities to find additional skarn material. So is that something that's being actively drilled right now, and is that mainly, as the diagram shows, life extension potential, or is there a scenario where this mill ultimately gets even bigger if you find another skarn?
Yeah, absolutely. I mean, really at the moment, and certainly the recent press releases has really focused on the new vein drilling, and that's where we've really prioritized over the last year, I would say. We have been doing some scout like S10 where we showed deep skarn hits, etc. We haven't, and certainly we'll be moving towards, once we've got all of these veins, we're going through the mid-year at the moment, so our priority is to really get a lot of that resource, potential resource, into the statement at mid-year. Then I think we'll then switch to maybe looking at some more of that dedicated skarn exploration further east. So yes, it's a priority, but not at the moment. Our priority is to get that vein resource to a good enough category so it can enhance the production profile for the future.
And in terms of the production rate, you do run into some limits on what you can do with long hole stoping and the placement of the assumptions that we have and the turnover time for the stopes and the paste backfill, because remember, we're not just mining stopes sequentially along strike, we're also mining them across dip as well. So by adding more strike length, yes, there is option that you could incrementally increase that production, but there is a long development scenario on this, and I think if we go further east, we probably would need another ventilation shaft in the east as well. But yeah, or the other one is maybe you do sub-level caving out there. But the reason we don't want to do sub-level caving in the other deposits is because we don't want that subsidence to impact our losing our vein mine. So it depends on how far east the veins go and our infrastructure for the veins as well. But if we continue with long hole stoping, yeah, maybe a bit, but not massively bigger.
And then just one on the CapEx, doing the mill purchasing just in time. I mean, a lot of companies, when they decide they want to do something, try and lock in, get the equipment ordered because there's inflation risk. So how do you think about balancing that off?
One of the trade-off studies we're doing right now is we're looking at equipment that we have already in the company. We bought a fairly good big plant to see if that makes sense to use that. But that's certainly something we're working through. We think that the right approach is to delay that plant as long as we can. There's no point having it there sitting around doing nothing. Yeah. And Steve, you want to weigh in on that as well? Yeah. Yeah. Okay. Mm-hmm.
The question.
Sorry, quick question. You talked about, not looking to increase the, amount of skarn that you're going to be taking out. But in terms of the 15,000 tons per day, I think you've allocated about 2,000 tons per day for the veins, high-grade veins, and this continues to find more and more veins.
Yeah.
Is there an opportunity to increase the tons from the vein side?
Yeah,
and is there any constraint there?
Well, the constraint right now is the infrastructure that we have in place and the plant that we have in place. We think we can increase the existing plant, but we would need more ventilation because we're going to use quite a bit of the ventilation for developing the skarn. So probably the best opportunity is when the skarn infrastructure is in place. I could see quite a decent size increase in the vein production. That's one of the studies that we've got coming up for the remainder of this year as to how that would look. We haven't completed it yet. We're going to wait until we get the resource update done as of mid-year, and then we'll go through the process of looking and seeing what we could possibly get out of that. There's probably room to increase the current plant a little bit, but our shaft right now is pretty much maxed out. We are hauling some waste up the ramp. All that 588 decline waste is going to go up the ramp, so we could maybe get some extra ore up the ramp too, but not a real big amount for the time being. When the skarn infrastructure is in place for those big shafts, then that's a game changer. So yes, definitely we could look at that.
It's not just about extending the high grade or the 20 million ounces across. It's looking to maybe increase that amount as well.
Yeah, absolutely. And we do have the option as well of, if you've built the other plant, to keep the existing plant going. It's a beautiful plant. I mean, it's pretty much a new plant, and it's a beautiful plant. So it was just an efficiency thing in operating cost that we decided to go to the one plant, but there is that potential there to keep that one running as well. Yeah. Okay. There's a break time.
We're taking a break for 5 minutes and coming back at 2:40. Thank you. Good afternoon, ladies and gentlemen. We're back. We're going to be looking at the Timmins, and just introductions first. Al.
Hey everyone, my name is Al Mazel. I'm the country manager for Canada. And I've been with the company for 9 years. Sorry.
Excellent. So we're going to tag team a little bit. So Al's going to come in with some more specific information as we run through the video. So let's get started. We're now in Canada. So we're going to be looking at the Timmins operation. We're 560 kilometers north in Timmins. Specifically, we're in the Abitibi Greenstone Belt. So, stretched across Quebec and Ontario. And really the takeaway from this slide specifically, don't be scared of all the colors, is the black porcupine desta, which is the big structural control, which comes across 400 kilometers. And that's where all the main gold deposits sit along this regional structural control. And Timmins, we're sitting right over here on the western edge. That's produced around 80 million ounces, the Timmins camp alone, over 300 million ounces coming from the Abitibi so far. So we're going to zoom into Timmins specifically, talking more about where we sit, Pan American, and the major deposits within the Timmins camp: Hoyle, McIntyre Dome, Palmore, Bell Creek sitting over there, and Timmins West down here. Obviously, we came out today with the press release on the exploration potential. We're going to be looking at some of those projects which all fit into this larger idea that we have now for Timmins. And Al is going to also pitch in with some of those details. So Timmins, right in the middle, you've got Bell Creek, which is the main center where our processing plant is. And we ship all our ore from Timmins across and up into Bell Creek. So looking very quickly at the reserve at Timmins, we're sitting currently at 850,000 ounces. We've maintained that certainly since we've had the project in 2019 through the purchase of Tahoe, and really maintaining that with constant drilling. And obviously the press release today talked about the deep drilling that we're doing at Bell Creek, which is a mature deposit, let's face it. So really good success there. And we continue to drill and got 120,000 meters to drill over this year in the mine and the projects themselves. So here we are zooming in. We've got the tailings over there on the left-hand side, Bell Creek mine, the processing plant there. And now we're going to strip that away and look at where the actual Bell Creek, which is an orogenic gold deposit. Now, orogenic gold deposits, they need structure, which we've got the porcupine desta. That's the main control on this. You need that fluid way for all those fluids to come up from this bigger tectonic events. And you need rock. You need the right rock type. So these are all being cooked. They're metamorphic. And also very characteristic of these orogenic is they're very deep. Generally, they're 2 kilometers plus. And if you can now look from that recent drilling that we released today, we're talking about 2.6 kilometers down. We're around our current resource and reserve sits at around the 1925, and now we're down to 2,600, another 700 meters of mineralization, which we've now been able to define, put in that deep drilling. I mean, almost 17,000 meters specifically on just that really deep stuff, and been able to release today. We're just going to zoom in there and show you some of those drill results. Sort of 19 meters at 3 grams a ton gold, 6 meters at 3.5, 4 meters at 5.65 grams a ton gold. So yeah, some good information for us to then make that decision that we wanted to deepen that ramp. So that's certainly been going on since 2023. So that nearly 50,000 meters in the whole project totally.
Good. So yeah, I'll elaborate a little bit on the Bell Creek shaft extension. So just a bit of background. 2020, 2021, as the resources were getting deeper and deeper, we kind of realized that the current infrastructure that we have, which the shaft goes down to 1080 level, would be a constraint. The haul distance would be quite far to get to below 2,000. So, as Chris explained, to justify any shaft, we would need to demonstrate that the resource would continue at depth, which, with the success that we've seen with the exploration, we kind of show that. And based on that success, in May on 6th, the board did approve the shaft extension. It will be a 625-meter extension of the shaft, which will bring the shaft down from 1080 down to the 1705 level. And we will talk about that in more details in the slide deck to follow in a few minutes.
So also in the press release today, we came out with one of the so-called satellite deposits, which was the Vogel. Vogel veins, so we call them, sit over here, close to the current infrastructure of the Bell Creek. This was explored in 1968, actually. It was found in 1968. Several of the companies in the history drilled it, bits here and there. Currently on the resource reserve book, we have 60,000 ounces in indicated, with around 130,000 ounces of gold inferred. So, sitting here, we already have an inventory of potential ore. And from that, we came in again around 2023 and started to drill some holes and really showed we had good continuity. We had better grade than we actually thought was going to be there. And now this appears to be a set of veins which we believe there's more potential at depth. Some really good grades here, looking at nearly 20 meters at 8 grams, certainly 12 meters. We've got 9 meters at 8 grams, 8.73 grams a ton gold. So some really nice intercepts with good gold grade.
And I'll talk about the plan for 2026. So we started drilling on surface in 2025. In April of this year, 2026, we will be extending the current drift on 610 at Bell Creek, which is an exploration drift. So we'll start extending that. It's an 814-meter extension. What this will do is it will allow us to drill the deeper part of the Vogel from underground. It's getting too deep to drill from surface. So by having that underground exploration drift will allow us to basically infill the lower part of the Vogel. And that's shown in the green lines there. That would be the drilling over for the rest of this year and into 2027. And the green lines from surface is the completion of the surface exploration program that's planned for the rest of this year. So that's essentially going to be 2026 and into 2027. We should have the infill drilling program pretty much complete in the next year and a half to 2 years.
It's probably worth mentioning that exploration access drift will also help the production in the future. Yeah. So we're gonna flip across, go southwest of Timmins, sitting in the centre there. We're now going to be in the Timmins mine area where we've got a large, a good package, 14,000 hectares. And the Timmins mine is really a successive discoveries, multi-different deposits on a structural trend, the 144. We're going to strip away the surface here and have a look at those deposits which have been constantly being found as they've moved southwest. And again, in the release today, we were talking about Samson, which was discovered few decades ago. Had a lot of drilling, nearly 60,000 meters of drilling on it. It was called the 144 South. And, it was, while lower grade, it's still going to add, 120,000 ounces of gold. And hopefully we'll be building that out in the future. We do have an access exploration gallery here, drift, and again, the green line showing the potential drilling that's going to happen over the next 6 months to a year as we build it out, and also that exploration gallery will give access for production as well.
All right, and last but not least, Gold River. So Gold River sits about 3.5 kilometers to the south of Timmins West. It's a 1,100 hectare parcel. So Gold River has two main deposits. The Gold River West on the right side and the Gold River East. That's where most of the 1.1 million ounce of resource sits. So the Gold River is a refractory deposit. We are doing some mine design work. As you can see there in blue, that's the mine design work. And we're also starting to do milling studies. We actually started that in 2025 to get some metal report so that we can have a better understanding of Gold River. And the mine design work that we'll talk about the milling and the mining design work a little bit more when Eric joins me in a minute. But this is to support a refreshed resource estimation coming into the 2026 mid-year.
Thanks, Al. Yeah, so again, it was in the resource, sitting there over 1 million ounces of inferred. With the current environment, we're finding additional value within the portfolio and really builds to that Timmins camp strategy as such. So as Al was saying, there's a mine design. We're building towards that resource for the mid-year 26, and certainly good things to come from that project, which again was in the release with some additional results from the previous company. We're now going to shoot back across to Bell Creek. We're going to have a look at the Whitney project, which again has been in some of our press releases over the last several years in the exploration updates on a yearly basis. Whitney is a joint venture. We have 86% of this. It's right on strike from Parmore, which sits over to the east. So again, we're on the structural trend, which has controlled all of these different deposits, from Bruland to Bonwit to Holnor. And don't forget, Holnor mine was historically one of the highest grade gold mines in the Timmins camp itself. Just doing a little 360 there. We're going to show the old workings. And I mean, this produced nearly 2.6 million ounces of gold at around 10 grams a ton. You can see here those old workings sitting deep. But really, our focus of our exploration has been on the top portion. We've drilled and have been drilling Holnor, and now we've moved across into Bruland. We're finding within those old stopes in the hanging and footwall, there's obviously remnant gold that wasn't mined because it was deemed low grade in that particular point. So it's really been the idea has been going in and drilling and updating the current resource, which sits at around 500,000 ounces of gold as it is. So certainly, Bruland is we released this in December 25, and some of the results here. I mean, you're looking at 2.9 at 36 grams gold. Certainly 3 meters at 11 grams gold. Certainly, very good grades, which shows you this historic area has still got mineralization. So we're looking forward to building out, doing additional work. We've got a program to drill this towards the back end of 26 and into 27 really, as we're focused more on our current projects at Vogel, which is obviously very close to our current infrastructure. That's the plan, as mentioned, and I think that's over to you, Al, and the more technical side.
Yep. So as soon as the video finishes up, we'll start with the slide deck next. And I'll welcome Eric Lachapelle. He's Director of Operations for Timmins Operations. So, yes, okay. So yeah, just to reset things here. Timmins West Operations, that's Timmins West Complex. That's on the southwest. It's about 20 kilometers southwest of the city of Timmins. You can kind of see the city of Timmins sits almost in the middle of both operations. And then we have our Bell Creek Mine Complex and Mill Complex on the top right side of things. So right now, all the ore from Timmins West gets trucked through the city of Timmins, about 42 kilometers to our Bell Creek Mine and Mill. And we will talk about a few projects that we have, one being a new haul road that will be very beneficial, not only on the cost side of things, but also on a safety side of things, because it does bypass from the city. So I'll turn it over to Eric.
Thank you. Good afternoon, everyone. Kicking off with the Bell Creek shaft. So at Bell Creek, our current mining centroid is 300 meters below the existing shaft. And that centroid continues to deepen as we progress with mining. This stretches our capacity to deliver the ore to surface for the mine. With the approval of the shaft extension, we will be deepening to a final shaft depth of 1705 meters from the original current 1080 level. This will be resulting in an additional 625 meters of the shaft's total depth. This will help to reduce operating costs by reducing the trucking requirements for the mucked ore. It will also help extend the life of the mine by allowing access to deeper resources. It helps as well to reduce greenhouse gas emissions by consuming less diesel overall for the hauling. The timeline on the bottom left shows how the diamond drilling, the geological modeling, the mine design, as well as the shaft engineering work has all been completed for this project. Now the construction and development work will begin, with the commissioning targeted for 2029. Speaking to the challenge of ground stability at Bell Creek, many measures have been taken to address these, as we have experienced some challenging conditions at the mine. Paste backfill is now fully integrated into the mining process. This is allowing us to re-access certain areas of the mine, including the central zone, which we have now reintegrated into the mining plan. Specialized ITH drills, borehole stabilizer products, enhanced stress modeling are all measures that have been taken to tackle these challenges at Bell Creek. Moving on to our soon-to-be completed haul road. With the goal of reducing costs for every ton of ore that comes or that is hauled to the mill from Timmins West, we reduce 14 kilometers for every round trip for the trucks hauling to Bell Creek. We also bypass areas of the city of Timmins, reducing the strain on the city's infrastructure and improving overall safety. Also shown here, besides the haul road, you see our tailings facility, just middle section to the east. The current life of our tailings facility carries us to 2035, and we have acquired adjacent land for other expansion potential of the tailings facility. Gold River, as mentioned, is located 4 kilometers south of Timmins West shaft. We advanced metallurgical testing and engineering studies for processing the refractory material at Gold River. We've completed scoping level assessments on flotation, pressure oxidation, additions to the existing Bell Creek processing circuit. Here at the bottom of the slide, you see the plan view of the Gold River mine design as it sits today. Now flipping to our long section. Down below we see the planned timeline for the development of the Gold River project. In 2026 and 2027, we're focusing on the PEA work for Gold River as well as infill drilling, which carries us to 2028 and 2029, where we'll be focusing more on permitting towards achieving a bulk sample in 2029. Readying us for production with a target date of the 2030s. Mill capacity at Bell Creek. As you can see from this graph here, we do have a gap from our total milling capacity of 5,600 tons per day from what is currently being fed from both of our mines. We're looking to shorten that gap with the addition of all the satellite deposits that we've been discussing in this presentation, as well as continuing to extend the life and the reserves of the existing deposits. We're also looking at toll milling potential for our neighboring deposits within the Timmins Camp area.
All right. So I think the main story here is that when Pan American acquired Tahoe, acquired the Timmins operations, when Pan American acquired Tahoe and Timmins operations in 2019, we were actually supposed to be closing this year. As you can kind of see with the long-term vision in the project pipeline, where we have reserves being mined into the 2030s, the Bell Creek deep extension, you can kind of see they're kicking in into the 2040s. We have Vogel that's coming in, again, kind of basically on top of the Bell Creek. Gold River, Samson, these are all projects that are right there in front of us that will be allowing us to go into the 2040s. So not a bad story, right? Going from 2026 to 2040s, that's basically the Timmins operations story. So, and jumping to Juanicipio.
I've got the right control. Right, hi, I'm back again. From Canada, we're going back down to Mexico, and we're going to talk about Juanicipio, which really is the sister deposit. It's very close to La Colorada. We've been here before, but really, I mean, talking about, Fresnillo and the district of Fresnillo, where, we could, where Juanicipio sits, 60 kilometers from Zacatecas City, 6 kilometers from Fresnillo town itself. And I mean, this is a historic mining camp, plus 3 billion. I think, Mike, you said 4.5 billion has been mined from the Fresnillo camp. Depends how the district, how far you project that, because this really is world class. We see all of those deposits again sitting on that northwest southeast sort of Sierra Madre on the edges of that tectonic break. And so really zooming into what is Fresnillo, the town, Salcito, which is a Fresnillo operation sitting directly east of Juanicipio itself, over nearly 7,680 hectares sitting really on that corner there. And from the purchase of Mag Silver and the discovery that they made right in this historic camp cannot be underestimated. And well, when we zoom into that district and sort of closer in geology, you see the main veins right on the corner, and we're going to show that in a bit more. But really, I wanted to, in this image here, is the historic mines, Annual and San Luis, are all sitting over there, and they were higher up, and due to tectonics and block shifting, Juanicipio sit undiscovered down here in the southeast. And as we move through the silica cap, you've got the whole system preserved, and really that's the story for the exploration that I'll be talking about in a little bit. Here we have the strike of the main structures from public information on the Salcito side, and of course that corner where Juanicipio sits is where all the resources and the exploration and the discovery was made. So there's the portal where they're currently developing the ramps, etc. And really, we're going to strip away the surface now, and we're going to focus in on the silver grades. And this is all the silver grades from that drilling and channel sampling from the database. Here we have the solids of the resources, and you can see this funny structure sitting out 90 degrees to the main structures. We'll talk a little bit about that. That's Venedas, which was a recent discovery several years ago. But really, you've got the dark lines of the infrastructure. I'm going to flip that round, looking northeast, and really the takeaway here is that you've got all of these different stacked veins along the principal northwest, south, east, and then this 90-degree Venedas, which is in current resource at the moment. Here we're just going to list out all of those different parallel structures to the main structure of Valdecañas. In the footwall, the Ramal 1 and 2, and in the hanging wall, Anticipada, Pre-Anticipada. Not forgetting that 85% of the current reserve sits in Valdecañas, which is really the mainstay of this at the moment, of the mine at the moment. And with 50 million ounces of inferred resource still sitting at Juanicipio, that's certainly something that we can see being drilled out as we move through in the production cycle. Also, you've got Juanicipio, not to be confused by Juanicipio mine. This is the Juanicipio vein. Remember that Valdecañas is where the main structure and supports all of the current production. Juanicipio sits 800 meters to the south, and Venedas at that 90-degree coming out from the main structures. We're sitting about 300 meters below surface, and as I mentioned, that was a blind discovery. Just looking at the reserve replacements at the moment, recently Fresnillo released the current resource and reserves for Juanicipio. We're at 132 million ounces of silver, having started off in 2023 with 122, plus you've had the production. So yes, there is a positive increase in reserves in silver ounces. Having said that, the average grade of that silver is decreasing. They're starting to drill further down structure, which is more polymetallic rich, which has been described in the past about the Juanicipio mine. So we are moving out of that bonanza zone, should we say, which goes around the 1,600, and below that you get more base metal. But it's still, I mean, your average width at Juanicipio 6 meters, but it goes up to 30 meters wide, which is quite incredible for this deposit. And of course, we're still sitting on 1 million ounces, almost 1 million ounces of gold. So, stripping away all the others and Valdecañas, and let's just talk a little bit about that grade distribution that I just spoke about. Here we have all of those silver-rich blocks over half a kilo, sitting still up at that upper portion of the Valdecañas. And as we move down and deeper, you'll see those pinks come down, and that's where all of the base metal rich is. So it really is a story of that bonanza at the top and that deep sulfide mineralization towards the bottom. Going back to the silver, and we'll just flip it around so you kind of get a good idea of that vein structure itself. And the sort of the gray traces are all of that drilling that's happened. Here we have that, the measured, indicated, and inferred resource shapes around it, and obviously further down at depth you've got all that inferred resource which still can be drilled further and added into reserves in the future. So where next? I mean, certainly from an exploration point of view, converting that inferred resource into reserves will be certainly a priority, and that's on the current structures we know at the moment. Also, we have the Juanicipio vein, 800 meters south. There's only a small portion of this which has been defined in inferred resource. That's still a lot of work to be done on drilling that structure south. And then we're obviously sitting on a good area where we've got the structure that we need, and this is all deep. Remember I mentioned that if we look at the historic and look at Piranha, etc., which were eroded down and they were exposed at surface, when we look at Juanicipio and then further to the southwest, certainly everything's at depth, so that is going to take some time. There's the Canada Onda structures and also Mesa Grande structure, sitting 7 kilometers south of currently the Juanicipio vein and mine. So still, I mean, it's prime exploration areas and certainly a lot of work that I know Fresnillo are working on, and it's been a pleasure to work with them. Thank you very much.
Thanks, Chris. Hi again. We'll quickly run through some slides on Juanicipio. Or we won't, one or the other. Here we go. This is just a plan view of the mine area. You can see the vein system that Chris has just been describing, as well as the conveyor project that comes from the mine up towards. I'm working from the bottom up here, actually. Up towards the surface, the underground portal, processing facilities, tailings dam, mine offices, and entrance there. So just a plan view of the site layout. This one Chris just covered. Worth mentioning that the silver reserve and gold reserves are, they're maintaining. The grade is coming off a bit, but the total contained ounces are being maintained and replaced. And I think as Sam mentioned earlier and Michael mentioned, this was an opportunity to buy 44% of the newest mine in the best silver district in the world. Two of the other bubbles on the top graph on the left, Saucito and Fresnillo, are neighbors, in the same district, current operations by Fresnillo. And the facilities really are first class, and Fresnillo has got very good at building this facility. This is a multiple version of the same thing they've built, but this time around, very state-of-the-art, good stuff. The circuit is very conventional, SAG mill, ball mill, underground crusher, a lot of what we were talking about on Funda La Colorada Skarn, only a smaller scale, selective flotation. It's very similar type of thing. More gold in this circuit, or in this deposit. And the one thing that would be different to the Skarn is that this has a pyrite circuit, and the pyrite concentrate is sold off to a smelter. And then in terms of operating performance, certainly we're seeing a bit of a trend of outperformance relative to guidance, and certainly we're tracking very well relative to guidance this year after the first quarter from what we're seeing, and the guidance that we have for all-in sustaining costs, we're way below that. We guided $225 to $425, and we're at -3 in Q1, so tracking extremely well from that perspective because of the higher metal prices. So in terms of both production and AISC, we're in a good shape there. And then some of the initiatives that we're trying to work with Fresnillo with and working with Fresnillo with on continued safety performance, as Scott detailed. We've got a specific set of safety initiatives that we have in the company, and we certainly have some good discussions with them. Similar-minded company on safety, continuing with some of the cost reduction initiatives that we've been talking about. The development is very important, and to get that and maintain it, not just for the production now, but for the deepening of the mine as we go forward. The conveyor belt I'll talk about in a minute. And then, as Chris mentioned, we need to keep on the exploration, trying to find more resources and convert them into reserves. And this is a slide on the conveyor belt. It's mostly complete. It's 4.2 kilometers long. It's a $37.5 million project with estimated savings by not having to run small trucks up the ramp of $8.4 million a year. So it'll take ore from the underground crusher and run it up to the plant. So it's a little bit unique with that big curve in it. So it'll be interesting to see when that's in operation. And that's essentially it. And I'll pass off to Jacobina.
Now I can tell you in Brazil, in Jacobina, it is always sunny. So let's get started with Jacobina. Bahia State, over in Brazil, 350 kilometers away from Salvador, over on the coast, on the east. We look at the regional story of Jacobina, and it's a paleoplacer deposit. So imagine 3 billion years ago, there was big streams and there was a big deposit over to the east, and that was eroding down, and this gold was coming down through the streams and it was depositing. So then that all got, over billions of years, sunk, cooked, tectonically overturned, etc., etc. And then all of a sudden we have the Jacobina Serra do Corrigo formation, which houses all of our gold, and that's free gold. In these conglomerate packages, we call them reefs, and they stretch over 155 kilometers, where we have 60,000 hectares staked, and Jacobina mine sits here, and so all the way up across this we call the Jacobina region, and we are doing exploration there at the moment. We've got some projects going. We've done some drilling last year, and we continue to try and advance some of those projects in that north of the Jacobina mine. And it's worth mentioning that the pink here is the basement rock, and everything dipping to the east. So again, we're going to look at those. The red are these conglomerate packages that house all the gold in the matrix. So it's all free gold, essentially. Jacobina is slightly different from the other paleoplacers in the world. There's been a lot of hydrothermal and intrusive events. There's been a lot of remobilization of that gold, which does make it slightly more complex than others over in South Africa. But the green here is these intrusives I just mentioned made it more complex. And really we're looking at 7 to 8 mining zones across a 10-kilometer stretch. And all of this is connected underground. So we're going to show you that in a minute. Here we have the concessions in yellow. We've got the basement rock at the back. These are all of our different deposits, different mining zones, Canaveras over in the north, Jabal Sul in the south. Here we have the modeled reefs, which are these conglomerates, which houses all the gold. We're going to give that, as I mentioned, 10 kilometers. Canaveras is really the higher grade zone that we have and has been mined, successfully over the years. And, when we look at over the years, I think it was in 1982 it started producing. I mean, this whole region has been mined since the 17th century with artisanal miners, etc. And we've had 1.4 million meters of drilling on this over this 10 kilometers, and we continue to find and continue to expand the resources, which is quite incredible. So we are looking west here, and we're going to show you. So here's all the infrastructure, over 400 kilometers. It's all connected underground, and we still retain a large resource base of nearly 8 million and proven and probable 3 million ounces of gold. And really it's been success through the drill bit. And just going to freeze it here. And literally, over from the 80s, you had Anglo American, you had the Williams, and then Yamana took it over in 2006. And really they started to ramp up this drilling and started to expand the resource here, and the production, and it's the real game changer here in terms of what those guys did. And certainly, we produce nearly 190,000 ounces of gold, and we continue to just constantly find additional mineralization within these conglomerates, down dip, infill drilling. So Morro de Vento, we released in December 25. We were just drilling up and around, filling in different areas of that resource, and certainly came up with some very nice results, which is going to add in the mid-year, sort of grades of 5 meters at 3.75, including 1.9 at 8.52, 9 meters at 3.39 grams a ton gold. So some really nice results, and this is all infill drilling above, closer to surface, which is good, because certainly the mine deepens. And this is all open at depth. These conglomerate patches just go down and down. So, that's certainly something for the future and a future target. With these reefs, we do call them stacked because we do have multiple reefs. So that it certainly gives us the advantage of doing that bulk mining to get the tons out, which Steve was going to talk to more. Jebel Sul, certainly in 2000, when we came in and started working with the operation, Jebel Sul was just being drilled, and we brought that into resource. And certainly some of the results, again, 3.68 at 4.95 grams gold, 7 meters at 3.42 grams gold. This is just the drilling from that infill drilling and converting inferred into measured and indicated resources. And as mentioned, open, down dip, and in localized areas where these reefs are, we've got access coming across to Jebel Sul, which will bring that into production in the coming years. And again, you've got the basement rock over to the west, north is to the right, and we continue to just infill, and certainly between Jebel north and south, we're infilling and bringing in more resources. So certainly, and again in December we mentioned the Maracota exploration discovery. That's been several years now. We put in 800,000 ounces of new inferred resource in the mid-year 2025. That sits on the western limb or western portion of the conglomerates. Canavera sits in front of it, and that, as mentioned, that's the higher grade. And the good and the positive that we've seen is that Maracota is starting to give us that higher grade that could replace the Canaveras. So we've stripped away Canaveras. We're looking west, and I'm just going to go through that cycle of the Maracota and how it has come to having 800,000 ounces of gold in inferred resource, and that constant infill drilling, which adds to the confidence of these deposits. So we've had around 60,000 meters of drilling in total at the moment. We're going to take you back. This is, we had around 10,000 meters between 75 and 2021. Some historic holes sitting over here to the north. And then 23 program came in, 12,000, increasing the confidence. And the 24, again, bringing in additional 4 meters at 4 grams gold over there. And it's just adding confidence to these conglomerate packages, which then increases the classification. And then December 25, we came out with some more results, which we got 4 meters at 7 grams gold in that infill drill hole sitting there. And so Maricota has been a success story. It's a new deposit that we found, and as we now look to the exploration for the next deposit, we will certainly be targeting the northern portion of Maricota going into Lagartixa, which we're going to show you now. Here's just an example of one of those cross sections, the drilling, the red of these conglomerates, and how we start to infill and bring up confidence of the content of gold sitting there. That's the program for 2026. Projections still open at depth. And really it's this northern portion where Lagartixa sits. And we've released results again in December 25, which shows at least a couple of kilometers further north on the western side. We also have the Canaveras extension north, which is on the eastern side of these conglomerates. And there's some artisanal miners mining over here even further north. So that gives us certainly some confidence that gold sits within these conglomerate packages. Some of the results that we released, as I mentioned, in December, and really Jacobina is, as we've mentioned, a fantastic deposit and built for success.
Well, good afternoon, everyone. My name is Steve Busby. As Michael indicated, I'm part of that elite group that was here for 23 years. 17 of my years, I was Chief Operating Officer with the company, and I had the fortune to turn over the Chief Operating Officer to Scott Campbell, as he mentioned earlier, in October of last year. And Scott has done a marvelous job of structuring this company for the next generation. This company is going to be around for quite a long time. You see a lot of young faces here, a lot of highly talented people, and it's really a pleasure to be part of this group and be part of the successes that we've seen. I've been very privileged. I've been given a new assignment as a special advisor to the company, and that allows me to do the things I love, the things I really love about this industry, working on new projects, working with accomplished teams at many of our sites and looking at the future, strategizing how we're going to take these assets to the next generation. As Sam and Ignacio mentioned, when we acquired Yamana, really Jacobina was the attraction to that acquisition. This is a long-term, multi-generational asset with lots of upside. And as you saw, Yamana did a marvelous job, successful job of expanding production there. When we got our feet on the ground at Jacobina, we really started to sense there's even more value at Jacobina to look at this in terms of an optimization. How do we optimize, the mining, the processing, the infrastructure, the community relations, the government relations? How do we optimize all aspects of this operation and capture the most value we can? So we wanted to kind of step back, cool our jets, if you will, on expansion for today, look at how we can secure longer mine life at this operation, really bring in efficiencies to this operation, and then also later down the road start to bring additional expansions into this operation. That's what we call the Jacobina Optimization Study. And we launched into that study soon after acquisition. We've been working very hard at looking at all aspects of this operation. And certain projects start to fall out as we do that. And that's what we suspect is going to happen over the next 5 to 10 years, is you're going to see a number of projects fall out of this optimization. And the first one's going to be a filter plant and a tailings stack facility. We do see a limitation to conventional tailings handling at the site. We're probably by the mid-2030s, we're going to be out of conventional tailings capacity. And given the topographic constraints, the land constraints, dealing with the communities in and around the operation, we really see an opportunity to bring tailings filtration, which we're quite familiar with, into this operation, go to a stacking facility, which opens up a vast life, if you will, for future tailings. Secondly, supplemental to that and complementary to the filter plant is going to a paste backfill underground. We're seeing limitations with open stope mining without backfill, which is the way historically it's been mined at Jacobina from day one. And we really want to stabilize the mining. We really want to go, you saw Chris showed opportunities at depth. In order to access that depth, we really need to secure the stope areas we're mining, and paste backfill will bring that to us. Paste backfill also, if you notice, there's a significant amount of gold ounces contained in measured and indicated resources that didn't make reserves. And a lot of that is coupled with this open stope mining method. Using paste backfill for the same primary developments we do for our current mining, we'll be able to access much more resource mining, much more reserve and production coming from the same development. So it brings a lot of efficiencies. It's complementary to the filter plant. That's kind of the second projects. These projects are moving from conceptual engineering through basic engineering. At the completion of basic engineering late this year, we'll come out with the details of those projects. What's the capital? What's the return rate on those projects? And we'll launch into those projects. Over and above all that, we see tremendous opportunities in the process plant. This plant was built 50 years ago, and it's been expanded tremendously through the years. And through those expansions, there's a number of obsolete equipment sitting in and around the current plant footprint. And we want to kind of find a way to modernize, streamline the circuitry. We see significant opportunities when you look at today's technology for processing gold-rich ores like Jacobina, free milling ores, if you will. We see tremendous opportunities to go into that plant, make some significant investments in modernizing and removing a lot of the obsolete equipment that's currently in the way of the operation there. That'll drive some cost efficiencies that'll offset the cost of filtering and paste backfill. And it'll also bring us higher gold recoveries in the long term. We see the ability to get above 96% gold recovery by improving those efficiencies. After we get all that done, now we can really start to talk about expansion in an opportunistic way where we're capturing optimally all the value that we can from this very, very interesting large resource that we have here. Oh, sorry, I missed the slide. So during 2026, we're estimating an expenditure for this growth projects, for these optimization projects, between $53 to $57 million. This is over and above the sustaining capital estimate that we put out for the operation of $67 to $70 million. And we divide up what we're doing in 26 into both studies. We got about $10 million of studies that we're doing this year, which is that plant optimization, kind of conceptual engineering and layout work. We're working on how can we sequence construction to upgrade and modernize that plant. The filtration plant and the paste plant, as I mentioned, we moved through conceptual engineering. We're deep into basic engineering, and we're just finalizing those projects. We have some power increases that we foresee in the future. The power supply has been a little bit weak from our perspective. We do get power bumps, particularly during the rainy season that disrupts our operations. So we've been working with the power supply companies to upgrade our power sources and give us much more stable, reliable power into the future. So about $10 million in studies. All the while, we're spending about $57 to $60 million on projects this year, some of which is upgrading some of the work that Yamana had started in the leaching and carbon and pulp circuits. We need to get those stabilized in the near term, and we're spending some money in there. The exploration that Chris showed us, we're seeing fabulous results in exploration. We keep pushing that. We have increased development rates. We do have a permit today that'll take us up to 10,000 tons per day production capacity. We're currently running about 8,500 tons a day. So we see an opportunity once we get the filtration plant running, the paste plant running, some of these optimization projects completed, we can take that up to the permitted level of 10,000 tons a day and continue those studies that then will lead to a permitting effort to look at future expansions beyond that in the next decade or two. So really the overall study of optimization of Jacobina is an ongoing effort to capture all the value we can of this operation. First and foremost, looking at extending its life. This thing's going to be around for multi-generations, and we want to be sure it's capable of doing that in a clean and responsible way. We want to improve the efficiencies of the operations, and really look to offset the cost increases we're going to apply with the filter plant and the paste fill plant, capture more of the reserve production or reserve recovery, and increase the ultimate recovery that we expect to get through the plant, and then ultimately bring the expansion to this great operation that we have at Jacobina. And I think that's it for Jacobina, and I think we got a bit of a question and answer session at this stage. So, Ovis, you got it. Oh, here we go. Yep.
Thanks. I just had two quick questions. One, just going back to the CapEx at Timmins, was the 146 for the shaft plus the 2 kilometer plus of decline development?
That's correct. Yes. The 146 includes the 131 for the shaft plus the development to Samson and the development to Vogel.
Okay, so that's like $15 million to develop, to do like over 2 kilometers of underground development.
Yeah, and it includes some drilling as well, right? Yeah. It's not just development, it's drilling also.
Okay. And then just wondering on the exploration at Juanicipio, as you guys are kind of at that corner of the boundary line, like how much say do you guys have in terms of the discussions with Fresnillo on, where the meters are drilled off and kind of, what's the risk that at some point they continue to drill further into their property and then, the operations becomes kind of more like 100% attributable to them?
Well, I don't foresee them drilling and producing off the edges of this claim into the Juanicipio claim. The Juanicipio is a true joint venture. So what they do on the other side of the concession is their business. We don't get involved. We get involved directly with what's inside the concession. So the exploration efforts that Chris mentions is inside the concession. Whatever's discovered there and produced there is processed through the Juanicipio plant, which is a joint venture plant.
Okay, but how far is the current operation from like that boundary line?
Well, you mean the plant site itself? Or what? I'm not sure I understand.
Or mining on the underground?
Yeah. Right now we're mining up to the concession boundary. We're not mining beyond.
Yes.
There is a buffer. There is a small buffer. Yeah.
So then if you cross the boundary line, doesn't that become 100% Frez?
We don't cross the boundary line. We do not mine across the boundary line with the Juanicipio production plant. We stop at the boundary.
It is dipping south, so it does dip back into it's in the Juanicipio and it dips further into Juanicipio. It's not dipping the other way, which is obviously
But whatever continuation of mineralization that may occur beyond the concession, that's Fresnillo's business. That's not our business.
No, I understand. But what I'm saying is, Fresnillo's the operator. At some point, if they kind of choose to do more development into that side,
they can't do it at the expense of Juanicipio production plant.
Okay, all right, fine.
Yeah. Yep. Any other questions? Yeah, Ovis.
Just a question on maybe with Juanicipio. You have been, or the mine has been, getting positive reconciliation for the last couple of years now in terms of grade. Is that just conservative modeling assumptions, top cuts that they've used? what's going on there that continues with that? And is there more potential for this positive reconciliation to continue?
Certainly we see. They've only just released the 2025 resource and reserve. So we're a year plus behind drilling and development, etc. The bonanza zone that they are in is exceptional, and we've certainly seen that positive reconciliation. Is there further upside? We have to remember that we are going deeper, and the silver grades do start to reduce as the polymetallic starts to increase. However, year to date, it's still positive reconciliation. So it's part of the cycle of getting that resource and reserve in, as well as the current production and the development into those areas.
Just a few additions to Dwayne's question as well. First of all, this is not like Fresnillo against Panama against. This is a joint venture, right? And Fresnillo owns 56%. So two things. This is the best operation that Fresnillo has. When you look at in the whole district, it's obviously even more in their interest than in our interest to do this the best possible way, as they get 56 cents of every dollar we make out there, we get 44. That's just a general statement. So there's a lot of effort, obviously joint effort, to go in further, do even more, drill more, get more out of that operation. Don't forget, this is the newest of the mines they built there in the district as well. And then to the reconciliation, we see higher grade month after month. I think we still see it as of right now. I didn't look this month, but last month for sure. Continue, but don't forget, and I said that many times, when you look like at La Colorada, you see exactly the same, right? Geologically, you go deeper down into more base metals, and hence you explore for those parallel structures to keep kind of a mix of the higher grade silver from the top with the more base metal deeper down. But at the moment, for sure, it still looks like that, we had probably get a bit more tons out of it and a bit more grade. I can see quite an aggressive top cut that probably caused that. But over time, when you look at the next 10 years or so, and you go just follow one structure down, you can't avoid that you're going to get into more base metals on that one. But every parallel structure that you explore and you start developing higher up will again start in gold and silver and then go into the base metal. So nothing different than what we see at La Colorada.
Yeah, on the tech report, you guys were supposed to be at 300 grams per ton.
Yeah.
So 400 is not bad.
We're much higher.
Yeah. Just kind of then moving on to Jacobina. It looks like the 10,000 tons per day, looks like that's pretty much in the bag.
It's in the bag. It's just a matter of timing. So we have to get these projects off and report it. We'll release those projects and the results of the project, and when the timing of when we'll achieve that 10,000 tons per day. But it is in the bag, you're right.
And then, Yamana was looking at all the way going to, I think, 15.
Yeah, we're not prepared to suggest that we can get to that level yet. I think that kind of potential exists, but it might be a decade down the road here.
Yeah. And then just last question on Timmins then. In terms of Timmins, obviously, lots of exploration upside, success going on there. At one point, we were having just discussion, Michael, earlier, that Timmins was almost a non-core asset at one point. So now it looks like it's done a complete 180. You're looking at production going all the way out to 2040, from what I understand.
Yes.
Is there upside not just in terms of extension of mine life, but also an increase in production profile, or is it just a steady production profile all the way up to 2040?
We actually had a good discussion on that this morning. Yeah, with Gold River, I have to say there is some opportunity to look at maybe expanding production rates, but it is a great result that we're seeing production beyond 2025. As Al mentioned, when we bought this asset, we thought 2025 was it, and that's why we declared it non-core. That was our mistake. That was wrong. This is a core asset. This is a very long life asset from what we're seeing. So that's kind of our first focus, is extending life. But with Gold River, with some of these external Whitneys, there may be opportunity to expand production as well as those projects get better defined.
Thanks.
Yeah.
Hi, Steve.
Yeah, hi.
I have a quick question just on Jacobina. You as the special advisor to CEO, can you let us know how you split your time among the different operations? The fact you come up here today to talk about Jacobina, can you let us know, what are can we see Jacobina as one of the strongest growth assets for Pan American Silver? I'm sure there are other projects as well, but how should we look at the future?
Yeah, great question. What's great about my position is I get to focus on what I love, which are these projects and strategizing these projects. I think I am spending a significant amount on Jacobina right now because I guess I would describe it as it's a fairly intensive project, and trying to bring the team in Brazil together with ourselves in defining what the vision is of where we're going. We're trying to find alignment. They've been working so hard for so many years at expansion, and this concept of optimization is new to them. So trying to bring that team up to speed with what our vision is and adjusting our vision to what the reality that they deal with is, that's really where the focus is, and that's where I spend a lot of my time. But I also have the great fortune to work a lot with the Timmins teams, a lot with the La Colorada Skarn development teams. So yeah, all the things that I love to do, which are projects, I get to spend my time on. Yeah. Thank you for that.
Yes, Charles from Jefferies. So just when I think about the Timmins assets, it does seem like you guys are moving to a regional processing hub, and I wonder if any thoughts have been given to if Pan American should be the one to do that regional consolidation, or is there scope for it to be done by another operator, just given the location of the assets?
Do you want to take that one on, Michael? Yeah.
It's obviously a great district. We've seen that, and it's a great Canadian district, which is very hard to find. And when you add all these satellites, when you add what else we do in Timmins, and you saw a few other things that we're working on, it definitely starts to shape out like that. Everything together, will build a great platform for us in Canada. I think we're not completely there yet, technically, to show you exactly how that production profile will look like, because you saw there's still some drilling to be done. There's still some technical study, and we need still another scoping study. But once we have it all together, I think it's going to look very interesting for us where this is going. I don't have the final answer to your question, obviously, because it's maybe 5-6 months a bit too early. But I think your thoughts are going the right direction for sure.
One more question.
Sorry, maybe just one follow-up on the Gold River. Do other operators in the region have refractory processing capabilities, and what would that kind of look like for you guys?
Great question. Yes, the answer is we do believe there's an opportunity. Whoever builds the first refractory circuit there is going to be able to access some additional resources in the camp. There are refractories, so we see that as a potential opportunity for sure. Yep. Okay, with that, I'm going to turn it over to Brett Bergeron for the sustainability ESG. Thank you.
Thank you, Steve, and good afternoon, everyone. My name is Brent Bergeron, and I'm the Head of Corporate Affairs, Sustainability, and Security for Pan American Silver. Don't be fooled by the color of my hair. We do have a lot of challenges on the sustainability side I guess the pressure just hasn't reached me yet, but I know it's on its way. So anyway, I just wanted to talk a little bit about our approach to sustainability, and just to mention that sustainability at Pan American really starts from the top, and it goes through the different levels to the executive team, to the people at the corporate level that supports the different countries where we operate, and also integrating it into the country managers and the mine general managers to make sure that they are operating at the level that we're expecting from them, and that we're actually committed to based on the commitments that we have with different organizations or associations across the world. We make sure to actually, I need to move my slide forward. There we go. We make sure to actually discuss and talk quite a bit with our stakeholders. And we integrate that also with the surveys that we do internally with our senior management team, just to make sure that we are consistent in terms of what we're doing on the ground, which is an important part of what we do to make sure that the contributions that are leading to our workers, the contributions that are going to our communities are always consistent with the expectations that are there. So we do have our policies and standards and our guidelines going forward. We do conduct quite a bit of risk assessments also in terms of making sure that we understand what's happening at our mine sites. And also, we try and integrate that in terms of all the work we do, whether it's the auditing part, whether it's the budgeting part. We try and put that in to make sure that we are responding to the right pressures and making sure that we are trying to overall alleviate the risk at our operations so that our operations can do what they do best in terms of safe production. Michael mentioned it at the beginning of his presentation in terms of our jurisdictions of where we operate, and it's through the Americas. And sustainability doesn't only happen during the time that we're operating our mines. With the corporate development team, we work quite a bit in terms of really understanding the countries and the opportunities that we're going in, and making sure that we look at the sustainability aspects of any type of new opportunity or new project before we actually take the decisions, not just on the financial and operational side, even though those are very important. In terms of remuneration for our executives, 30% of the remuneration is actually based on sustainability factors. So, it's one way that we try and really make sure that we ensure that our team is focused on doing things right going forward. When we take a look at how we perform with our sites, we have now what we call our integrated sustainability audits. And the real reason for doing this was we want to make sure that the sites are operating at the levels that we're committing to. But we also want to do this in a way where we're not going to the site continuously every year to be able to bother the sites from the actual work that they need to be doing. So we stagger that over different amounts of years with respect to different sites that we go to, but we try and integrate the different disciplines together to make sure that we do this once a year. We actually work with the sites in terms of their remediation plans, and then they move forward with their decisions in terms of how they want to handle it, which is part of the decentralized structure that we currently have. And also, as Scott mentioned, in terms of the safety audits, very important to us, and we also do that on a continuous basis. The different standards that we adhere to, of course, being a member of the Mining Association of Canada and having our assets here in Canada, we use the Towards Sustainable Mining standard, which is extremely important in terms of our commitment to the Mining Association here. But we took a conscious decision about 5-6 years ago to not just implement TSM at our Canadian operations, but do it throughout our portfolio. And that was a very important decision, just to make sure that all of our operations are operating at the same standard, but also to alleviate some of the pressures that we hear sometimes from different organizations say, well, you operate very well in Canada, but you not necessarily do the same in other countries. But here we actually do. We perform the audits, internal and external audits on our operations, which is very important in terms of our disclosure that we do on a continuous basis. After the Yamana transaction, we continued as a member of the World Gold Council. Therefore, we are also implementing the Responsible Gold Mining Principle, which helps us in terms of the breadth of the standard. TSM is focused quite a bit on Canada. The Responsible Gold Mining Principle opens up in terms of some of the international standards that we also need to adhere to. Of course, the voluntary principles on human rights and security, especially in the Latin American countries where we operate, this can be very important in terms of training our people, training our suppliers, training our suppliers of security teams at site to make sure that they're reacting the proper way when some type of incident actually occurs. And finally, the conflict-free standard, which is also part of our membership at the World Gold Council. Very important for us in terms of our refiners who want to make sure that we really have a clear understanding of our entire supply chain and knowing our customers in the end so that they have more they're more comfortable in terms of knowing what we're actually shipping to them in terms of concentrate or also in terms of doré bars. In terms of the ratings that I know that some of you and some of our investors actually use some of these services sometimes. We monitor this on an ongoing basis. We feel that our scores are quite well placed right now in terms of the percentiles that we are in. We do interact with some of our investors, and they do have their own ESG analyst team. So we do it both ways. But I think that when I take a look at, for example, what we've done with S&P Global in terms of being ranked now in the top 5 percentile of the metals and mining industry, I think it's really indicative in terms of how we take sustainability and our operations very seriously, but also in terms of trying to be very high in terms of our scores with our peers. So this year we actually were added to the North American Index for best in class, so a very good achievement by all of our team and all of our sites that are implementing a lot of the standards that we're actually doing at this point. Some of the important aspects of what we're currently doing right now, mine closure and rehabilitation. Of course, we have 3 mine sites that are under closure operations at this point. Alamo Dorado in Mexico, which you see a picture of it here. Also the Dolores mine, we're still producing off the heap leaches at that mine, but it's in closure operations at this point in Chihuahua, and also the Manantial Espejo mine in Argentina. That's the physical part of what we do in terms of complying with our permits, but there's also a social closure aspect, which is extremely important in terms of transitioning the mine from being an operation and all the workers there to being an operation that's going into closure activities. So we do quite a bit of work in terms of participating with the communities and defining some of the future priorities that they have and establish programs to be able to do the conversion once the mining operation stops. One good example of this in terms of what we do on the social side is our socioeconomic contributions, which reached in 2025 $2.8 million. Very important for us that we look at this in terms of community investments, in terms of the pillars that I've listed here, simply because we do consider a lot of these activities to be part of the social closure plan, because we're investing in activities or businesses that are not necessarily directly related to the mine site, but we look at these projects in terms of how they will be surviving once the mine site goes into closure. So very important in terms of what we're doing and moving forward with these. As we all know, the price of gold, silver, and other metals is very high, and in the jurisdictions where we operate, that can be a challenge sometimes. So we want to make sure that our security practices are up as high as we can in terms of making sure that when some type of violent event does happen in the communities or around our mine site, that our number one priority is to protect our people and protect the asset. but just to make sure that the overall reaction of our people is done the correct way. And I always find that the training that we do provide to our teams, to our providers, security providers, in terms of the voluntary principles is really integral in terms of making sure that our teams really know how to react in certain situations. So we keep concentrating in those areas in terms of what we're doing with our security teams. And finally, as you probably know, we published our sustainability report last week on Wednesday. Congratulations to my team that is here today. It'll show you a lot of the highlights in terms of our performance, sustainability performance in 2025, and some of our goals going forward. We're happy to answer any questions. I know it was only out last week, so I doubt that a lot of people have gone through it completely. But it is very comforting for us that when we do our one-on-ones with our investors, we feel that they do read our sustainability report. They do ask questions on very specific topics, and also give us quite a bit of feedback in terms of how our investors are feeling towards how Pan American is actually handling sustainability across all of its portfolio. So with that, I'll pass it over to Ignacio to do the finance, and thank you very much.
Thank you, Brent. I'm Ignacio Couturier, Pan American Silver's Chief Financial Officer. This will be my 24th year at the company and my 4th year as Chief Financial Officer. So been in that small group with Michael, Steve, and Martin, seeing the company grow. So yes, I oversee the finance function. The main responsibilities are financial planning, financial reporting, capital allocation, some financial risk management, IT, and supporting the capital allocation decisions that we do. Today I'll look at the financial position of the company, what our performance has been in the last couple of years, as well as looking at our costs. I know there's lots of questions what's going on with our costs, what's been going on all over the world, and then review some of the capital allocation topics that we've discussed, with special focus on the new enhanced shareholder return framework that we announced earlier in May. So starting off with our financial position, so today we have around $2.6 billion of available liquidity, made up of $1.6 billion in cash and short-term investments, plus $750 million of undrawn credit, and $200 million that's sitting in the Juanicipio JV. So a very strong position for the company to be in. If you look at our debt, we always had a very conservative approach to debt management. The bulk of the debt on our balance sheet today is made up of the Yamana bonds. Those were issued by Yamana prior to our acquisition of Yamana. They were issued at very favorable interest rates. The $500 million tranche was issued at 2.6% coupon, and the one that's due next year in 2027 was issued at 4.6%. So we're not in a rush to pay those back, given everything else that's going on in the company and the current interest rates as well. In terms of our financial performance, I think this graph really tells a story. You can see both the realized price per ounce on gold and silver, as well as our all-in sustaining costs. So you can see that we've had very disciplined approach to our costs. We've maintained our costs throughout a lot of pressures that we've seen throughout the industry. On the silver side, it is worth mentioning a couple items. Number one is that decrease that you see over the last couple quarters is mostly driven by the byproduct from the gold. We report all-in sustaining costs on a byproduct basis. And offsetting that is quite a bit of variable costs going in the opposite direction. With the higher prices, we are seeing higher royalty payments at La Colorada, at San Vicente, some workers' participation in Peru as well, specifically in Moron. So yes, there's pressures going on in different directions, but overall, the byproduct credits have been offsetting and it's been decreasing. Our guidance for this year is around, I think, 1575 to 1825, and we're coming in lower, but that's mostly driven by the high gold prices. Moving on to direct operating costs, this is a breakdown of our Q1 costs, around $381 million. You can see the bulk of it is salaries, which is around 30%, contractors, which includes labor portion, also an equipment usage and consumables, that's 25%. then direct consumables and reagents 20%, maintenance and parts 10%, and fuel at 5%. So we're getting a lot of questions what's going on with our fuel prices given everything that's going on in the world. So luckily, in none of the countries where we operate are we seeing any interruptions to our fuel supply. However, we are seeing increased fuel costs. In general, we're seeing between 30 and 50% higher fuel costs, mostly driven by diesel. The biggest consumers of diesel in our portfolio of assets are Shawindo, which is open pit, as well as Cerro Moro, where our electricity is generated by diesel as well. Now, I'd say that apart from the direct fuel exposure, we are seeing increasing costs with some transport costs as well as explosives. We are expecting further inflationary pressures coming. As we've seen in other inflationary cycles, LATAM can be slow. The good news is that a lot of our supplies are sourced locally. We don't import that many supplies. But given if these fuel prices remain high, we are expecting general inflationary pressures later in the year. Moving on to risk management, this is mostly on the financial side. So first of all, I'd say that we do not hedge either gold or silver, which are our primary products. We do hedge some of our financial inputs, including foreign exchange and base metals. You can see there on the right-hand side, there's a sensitivity, plus or minus 10% swings on the FX, how that affects our operating costs, as well as base metals, how that affects our consolidated revenues. We do have an active hedging program where we try to manage these risks, reduce the volatility. At the end of the day, the goal of those programs is to make sure that we make budget and some of the assumptions we make for our cutoffs are being met. So you can see the track record we've had in terms of gain and losses from that risk management programs we've had over the last few years. So as I mentioned, we've had an outstanding track record of financial performance over the last 8 or 9 quarters. $1.3 billion of revenue over the last 2 quarters, plus or minus $500 million of attributable free cash flow over the last couple quarters, adjusted earnings of over $1 per share for the last 2 quarters, and return on investment of around 30% for the last 2 quarters as well. So outstanding results. So in terms of capital allocation, Michael mentioned this in the beginning of the presentation. I would say when we think about capital allocation, we think of 3 big buckets. One is financial strength. I mentioned the balance sheet, our strong financial position. Ideally, we want to maintain that to give flexibility to Sam and Guido when they're looking at potential targets to know that we can react quickly. So that's having a strong cash balance, have availability of credit when we need it, maintaining sustainable levels of debt on our balance sheet. The next thing is making sure that we have the ability to fund all of our growth projects. As Steve and Scott have mentioned, we have lots this year with the Timmins shaft extension, all the projects in Jacobina with the optimization, and of course getting started with the Skarn. Around $265 million of the full $1.9 billion project has now been approved by our board. That's the early works for the decline. This year we plan to spend around $90 million on that, or $93 million in total for the Skarn projects. So once those are taken care of, then we can talk and think about how we return value to our shareholders. So in early May, we announced a plan to return between a target of 35 to 40% of our attributable free cash flow back to our shareholders in the form of dividends and share buybacks. As Michael mentioned, the dividends are around $300 million, and the balance will be share buybacks. From a financial perspective, I think it's a good balance between the two. As Michael mentioned, increasing shareholder returns through buybacks has an anti-dilutive effect. So for the remaining shareholders, they hold more and more value in the company. When I mentioned that 35 to 40% of return to shareholders that we have targeted this year, that's very much in line with what we've done historically. When we look at the last 16 years, we returned $1.3 billion of value to shareholders. And that represents around 34% of our free cash flow generated, 34% for dividends, and 8% for shareholder buybacks or share buybacks. So very much what we've announced this year is in line with what we've been doing historically. It's just that we have a very recent increase in our free cash flow, and we decided to formalize that in this enhanced shareholder return framework. On the right-hand side, you can see our plans for capital. This is on the project side. So around $240 to $250 million consolidated project capital. That's on top of $320 to $340 million of sustaining capital plan for this year. So we have ample capital to fund all these projects, to maintain a very strong balance sheet, and then still target up to $1 billion of returns to shareholders. In terms of leverage, this is a graph of the last 6 or 7 years of our debt levels. So the line there is the gross leverage ratio. That's our debt to EBITDA. As an investment grade issuer, we have the target of maintaining less than 1 times debt to EBITDA. We saw those numbers go up after acquisition, specifically the Tahoe acquisition, the Yamana acquisition, where there was a large cash component of those acquisitions that was funded through debt. We were very disciplined in repaying the debt as soon as we could. As you can see, now we're in around 0.5. So this gives us ample room to extend our debt if we need it to. Moving on to the SCARN, in Martin's presentation, you saw the capital requirements around $1.9 billion. Here's the spread year to year, with around $93 million in the current year. Given today's financial position of the company plus its cash flow generation, we don't foresee looking for external funds to fund this. We think that we can fund this completely internally. So it's a great position to be in, to advance one of the most important projects the company has just with internal resources. And this is my last slide. This just highlights the track record the company's had in terms of financial management, return to shareholders. We actually, to make this graph kind of look proportioned, we had to cut off the $1 billion. So as I mentioned, $1.3 billion over the last 16 years of return to shareholders, and this year we're targeting $1 billion. So an enviable position to be in. I think this is a great value proposition for the company. And in general, I'd say the goal of the financial management of this company over the years has been to support its growth, as well as returning the maximum amount of shareholder value. So with that, I'll pass it along to Michael for closing remarks.
Oh, great. A lot of information, I know. Obviously, it's recorded, so you can revisit. I think there are copies of the presentation outside as well, if you would like to take one home. But just quickly, and we had that slide before, but for me, these are actually if somebody would ask me how you build a successful mining company in the world, there's a lot to do that, but those are like the building blocks that you need, right? You need long reserves. You need a very solid management team. You've seen here there's a lot of that. Obviously, this is only a small group. Worldwide, between employees and contractors, we are about 17,000 people running these operations for us, and there's a lot of experience. Obviously, on the technical side. Mining is a very technical job, and you really need to understand how that works, not only to run it, but to build it and to find new one and replace it and do it again and again and again, because at the end we're dealing with depleting resources, and we have to find new resources all the time. And that brownfield exploration is absolutely crucial for us. We will never save money on that. We always spend, and we always did in the hardest times, we always spend our money on exploration, because when you do that, they obviously start running down your reserve base or resource base, which is, kind of the beginning of an end for a mining company, of course, because that's all really we have to work with. But you want to have those beside your strong operations that generate a cash flow, and you saw it with Ignacio's slide, that the strong position we are in. You also need those projects, those catalysts going forward that really make a difference for the company in the future. I think you have seen a few of them. There's a few more. They're not all completely ready yet to share, and please stay connected with us during the rest of the year and early into next year, because there will be a lot of news flow, as you can imagine. There will be reserve update, exploration updates. There will be more results coming from Timmins, more results coming from Jacobina. Of course, La Colorada We'll update you how that goes, with not only with the exploration, but also with actually the building of the ramp and additional projects of La Colorada that gonna get approved by the board this year and next year to move that project forward. So there's obviously a lot of news flows coming in all those projects, and pretty soon you will have, I think, really the full picture. Especially, I can't wait from the Timmins side to have the full picture and see and share with you how that looks like and how that district looks like for the next 20 years or more at Timmins, a district that we kind of thought when we purchased will close down in short order. Of course, metal prices help. Metal prices help for every mining company, or should. But you saw the strong discipline to keep our costs low is absolutely crucial for that. So keeping those big margins and harvesting those margins and use those results, that cash, to advance our project that we have and be able to finance our largest build ever at La Colorada, obviously crucial for us and will yield very good returns for our shareholders. I think with that, we can have another round of questions if there are still questions.
Michael Lawson-Winder from Bank of America. Thank you very much for today. It's been super helpful. Thank you to your team for all your presentations. Very much appreciated. I wanted to ask you, and please, if your team would like to weigh in, your thoughts on capital return, and not to diminish by any way the $1 billion you plan to return to shareholders in 2026, but acknowledging there's a lot of different drivers of the free cash flow that's available for capital return, but also recognizing that historically there were periods where you returned far above the 42% historical average. How should investors in the investment community think about potential upside in capital return from what you've now set today?
Oh, yeah. Look, it's a great question. And I think if everything continues like that, I think our cash position under the current metal prices will still continue to grow, even though that $1 billion really returned in 3 quarters mostly and not in 4 quarters, because I think we only did about a $25 million share buyback in Q1. Don't forget, it only got approved when we announced the Q1 results, so in Q2. So there's quite an accelerated program here for share buyback that we are very active in right now, and dividend payments for the rest of the year. But when you look forward, and Lawson, if obviously metal prices stay in similar levels, absolutely, I think there's more room. I mean, this is a singular situation that not only us, but the mining industry has to actually substantially reduce their share count. But for the first time in my career, there has been share buybacks all the time historically by companies, but they were tiny, very small, included by Pan Am. At the same time, every mining company in the world used their shares, used their currency to purchase new projects, which obviously only goes into one direction when you deal with depleting assets. So having the chance now to actually significantly reduce that share count, hopefully over the next few years, is a single opportunity for us and large part of the mining industry. And I absolutely want to use that opportunity to not only do it this year, but to continue doing that, hopefully over many years. And as I said, reduce the share count that Pan Am has out there, while we can still finance internally the biggest projects we ever endeavor to build.
And if I could ask a follow-up. Your team spent quite a bit of time focusing on the 4 key growth projects you have within the portfolio: Juanicipio, Jacobina, Timmins, and La Colorada Skarn. Nevertheless, your introductory slide and your closing slide highlights the optionality from Navidad and Escobal, but we haven't spent a lot of time on those, and completely understand that the Escobal process is out of your control, and then in a way the Navidad process is as well. But is there anything you're seeing right now that would that you might point to that would give you incremental confidence that those assets could come into the portfolio on a relatively near-term basis?
Yeah, and obviously the team didn't spend a lot of time on it because right now there's no capital project for those projects or mines. Although those would obviously make, besides La Colorada, the biggest impact to the company. Let's look in Guatemala. Definitely, there's no capital or hardly any capital needed to move that forward. And I spend a lot of time on that. I spend a lot of time in Guatemala right now and having discussions to see how we can finalize that consultation and move forward with the mine. It's a great mine. It's another 20 million ounces a year sitting there at today's metal prices. The costs that we show are all other costs, from 2017, 18. I think it was about $8. For sure, costs will be higher right now. I don't know exactly where, but even if they would be 50% higher when you fast forward to a production, huge return obviously on a project like that or in a mine like that. And of course, there's a lot of time that goes in there. I just don't have any timing to share with you, when that production will be back. Similar situation, Navidad, probably a bit longer out, and obviously capital required because the mine isn't built. But there's really a law change needed first in the province of Chubut that actually would allow open pit mining before we can go into a permitting phase. We all hear about the great things, and we feel it as well at Cerro Moro, the great things that Mr. Milei is doing in Argentina, and the positive changes and big projects that are coming to Argentina over the next, I would say, 10 or 20 years. And obviously it would be great to add Navidad there, but obviously a political change that we need to wait for, and that approval of or change of that open pit law in Chubut before we can advance. Navidad is ready to go in that sense. I mean, we have the feasibility really in the drawer. All the work, technical work is done there. It will be a longer process, as I said, because it needs to go to permitting and then construction. So longer than obviously when you look at Guatemala.
Yeah, just one last question for me. So, how do you think about non-core? Like, how do you qualify non-core assets at this time, and should we think about any potential rationalizations down the line?
Yeah, look, I mean, I'll be always very careful just to name one asset and say it's non-core. First of all, we just showed 2-3 cases here that changed completely around. And I don't want to have a demotivated workforce thinking that they're not important to us. They all do great work. And even if a smaller mine like in Bolivia has created and generated really, really valuable cash flow for us in production in the past, and in many cases give us maybe a stepping board to something bigger. Right? We have investments in Bolivia in other companies, for example. So I don't want to just call one asset out there and say, we want to sell that or it's non-core, because lots of things can happen until it's there. But of course, the longer picture that you saw that Sam showed to go for longer life, bigger assets over time, and then sell off or find a solution for the smaller one will be always the goal here, to build this even bigger and stronger Pan American Silver. But I will be very careful just to call one out, because I don't think it's the right way to think about it. I think it depends. It's not only the asset, it's obviously political situation. It's how many other projects we have. Maybe you have great exploration success in the same country somewhere else. As I said, we can use the workforce and the knowledge to advance a project like an additional exploration discovery. So there are lots of other issues we need to think about before we would make that call, sell something off. What we sold so far were all non-producing assets except La Arena in Peru, which will be mined out the gold side, and he went into a copper porphyry, and that was not our business. But everything else we sold was non-producing so far. Okay. Well, thank you very much for coming. Thanks everybody on the call. It has been a lot of information. As I said, you can listen to the recording. I think there's some refreshments out there. Maybe we can continue and have a few Q&A sessions out there as well. And please feel free to ask all the team here what they think, what they know, and what they have to tell about this great company. I'm pretty sure you shared you share with me, or you understand why I'm so happy where the company is right now. A very motivated team here. Not only good projects, but you need a motivated team actually to get there and to push those projects forward. There are a lot of work, not only capital, but a lot of work. The company's in a very, very exciting position right now. For sure, the most exciting place we've ever seen it, Steve, in our time, and really looking forward to look at the next stage of growth that Pan American's going to go into. So thank you very much for coming.